Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, welcome, good morning, and thanks for joining Stocksnipertrading. My name is Ron, my partner is Dave. It's Friday, August 11. Thanks everyone for joining. Good Friday, happy Friday, Juma Mubarak to everybody. Guys, what I was just saying before we got started with our snipers in the Zoom, everybody just be careful trading today. It is Friday. Fridays are traditionally a very, very difficult day to trade in the markets. It's end of the week. Mondays and Fridays are, you're probably noticing, are maybe if you're looking at your journal, Mondays and Fridays typically are the most difficult days for retail traders. It could be the start of the week, it could be the end of the week, it could also be the volume that flows through the markets at the beginning and end of the week. So traditionally Tuesday, Wednesday, Thursday, midweek is the best volume to trade. Some traders have a lot of success trading Fridays, others struggle with Fridays. So all we can do is just please use your own proper risk management, okay? And also take a look, reflect how you've been trading for this week. Are you above your weekly goal? Are you at your weekly goal? Are you below your weekly goal? So just knowing that, that's kind of your benchmark, and then you can go from there. So if you're exceeded your weekly goal and you're having a great week this week, some of you guys are, so I need to speak to you guys as well. If you guys have exceeded your weekly goal, maybe you put 2 weeks now back to back and you're doing really well. So you need to allocate a certain amount of risk. Do you want to risk more, or do you want to be more conservative on a day like today to carry forward your progress into next week? Also, if you're break even, if you've had a break even week, you've gone up, you've gone down, it's been a roller coaster, then just maybe try and stay towards break even or a little bit positive today, and then go into the weekend reviewing your notes, your trades, and everything like that, and how can we improve that going into next week. And unfortunately, there is some traders who are in drawdown. They're down 1 or 2 or 3%, or you're in a hole. Okay, we've all been there, but it's now, what do we want to do on a Friday if you're already down a little bit? Do you want to go over leverage to try and make it back, or do you want to kind of maybe play it a little safe on a Friday, and maybe work towards next week getting it back to break even. Okay, so everybody is in a different situation here, where every trader is not all the same, but all we can do together is practice proper risk management, whether we're ahead, we're break even, or we're down. These are things that all traders need to work on. Okay, so with that being said, I don't want to spoil the party or anything like that, but I just want everyone to trade with the proper risk management, because that will help you understand how to trade every single day. So this is what we need to learn as traders. Some of us take longer than others to learn that discipline, but we will all get there. Okay, so just everybody has their own pace to get there. What we're going to do, the scheduled lineup today, is we're going to look at gold. Okay, I have gold right now on our TradingView chart. And I also have gold over here on our BookMap chart. You can see it's really consolidating, like right in here. The volume is really tight. You can see how it's trading also on the candlesticks. So we're going to go into some news today. We're going to go into COMEX market open in the next 45 minutes at 8:20. The opening of COMEX, and then 10 minutes later we have USD red folders. We have core PPI month over month and PPI month over month right here. And we had CPI yesterday. So what's the difference with PPI? Real quick, if we just read it here, it's a change in the price of finished goods and services sold by producers, excluding food and energy. So the actual greater than forecast is good for the US dollar. If it's actual good for the US dollar and it's good for the currency, then we should see a decline in gold if US dollar is strong. Traditionally, that's the correlation. If we see that the actual is not good for the US dollar, then maybe we should see a little bit of a push in gold to go bullish. Okay, and let's just look at what they're saying. The actual, so we had previous was 0.1%, and they're forecasting a 0.1 increase to 0.2. So we'll see the actual result. Is it going to be 0.2? Will it be 0.3? That's better than forecasted. That's good for the US dollar. Then maybe we'll see a decline in gold. What if this is 0.1%? That's a decrease from their forecast, and then maybe we'll see gold go up. But that's just following this. Sometimes it's not always correlated exactly what will happen. Sometimes the news is already baked in, and we'll see how the market reacts. And then we have the next one, PPI month over month, similar, 0.1, 0.2. And then we're going to go into Wall Street open 9:30. Then we have 10 a.m. this USD red folder. This is the preliminary report from the University of Michigan, the consumer report. So we'll also see how that goes. Maybe we'll go right into like 10 a.m., maybe 5, 10, 15 minutes later, and we'll watch this folder as well. Okay, so just be careful. We've had a lot of news come out of UK, lots of news, a lot of positive news, a lot of green. So if you were trading in London, hopefully you did really well. Okay, so let's get started. So what we're going to look at is we're going to look at gold. Okay, I'm going to start off with a top-down analysis. I'm going to just look at gold, how it's trading. Okay, so we've had this bearish push since mid-July where we came up. So you can see that this is that monthly area of resistance up here, 1980s up here. Every time it's coming up here, it's getting rejected. Coming back up mid-July, got rejected, and going into August, we're moving away from this area. So it is making on the daily, you got this double top up here, this M pattern that closed below. It pulled right back up, lower high, continued to push down for lower lows. Gold came right back up to 1950. Now it's psychologically below 1950 block. So we're continuing to push all the way down into this area. So we're coming down very close to that psychological 1900 area. We're trading right now in 1918. We're like in this no man's land right now where it's trading. But we'll see. Is it going to come down? Are we going to hit 1900? Is it going to go below 1900 in the next few weeks? Are we going to make our way back up to like 1950 and maybe consolidate back up here? So we're at a very critical area on gold. On the daily this week, like starting over here Monday, we've been pushing for a lower low. Tuesday, we came up, lower high, continued to push for a new lower low and closed bearish. Midweek Wednesday, we came back up to just above 50% up here into this area of resistance over here. And it was a lower high, continuing to push, take out the low, close Wednesday very bearish down at the bottom. And then we had Thursday, the news, okay, in the market, CPI, they gapped it down and they pushed it they opened it right here, they pushed it up bullish. Again, a lower high and come and close down as a shooting star candle right near the low. And today, they kind of saved it. They opened it side by side, and our low today, it's coming up bullish again. But we have this big wick to fill. You know, when it's like a shorter wick and it doesn't have too much resistance, but it's got a big wick to fill. So we'll see if it can continue to come up with news in the market at 8:30, or it could come right back down and then start to fill into this area down here. So for our low of the day, I'm going to place a purple line just so for me, for personally myself, and for you guys, we know that the low of the day is around 1911, 1910, 1911 area. And then what happened when we hit our low of the day? How does it line up with anything to the left of the chart? So I can see there's two bodies, critical bodies right over here. That was early July. We come into here. This is where it broke down end of June, but came right back up. So do you guys remember when we hit that low of 1893? I think some of you guys remember this when we came down there, but we didn't have too much volumes close below here, so then it came back down, held here, and that's what started that big bullish run. So we'll see over here how it reacts. If we come back down to our low of the day and we break, where could we possibly go to? Maybe 1907, like right around here where we have these bodies. I'm going to go yellow line here. I use a yellow line for other typical, other critical daily levels. Then below 1907, we just have this wick come down, this wick break 1900 to 1893, this wick come down, back up, this wick come down, back up. But we have, like in this area, 1902. So what I'm going to do is I'm going to just place a box from like 1902, these wicks, down to like 1899, 1900, that psychological block in the market, and I'm going to make this block green, like coming into here. And then if we have an impulse break below, then we're looking at 1890s, 1893. And that was our most recent low on gold. We have nothing below here. When was the last time we cracked 1893? You got to look to the left of the chart and then start to look over here back in March. Okay, so back in the springtime. So then we got 1885 down there. I don't think like today we're going to come down here, but just getting your charts ready for maybe next week or the weeks coming up, we got to know where our levels are below us just in case. Okay, this could be a big bottom, like the way how it's coming down. This entire bottom could create, like if you just look at it, this could be one big bottom and then it recovered and came right back up. Then we came up to here and now we're coming right back down. So it might come down into this level, trade inside here, and then it might be like a big double bottom on gold on the daily, and maybe continue to make its way back up to 1950 would be my psychological block, and then see how it reacts there. But it could also just penetrate down here, pull back up to the 1900 block. We use that as resistance and then gets rejected, and all of a sudden gold is coming down here. That's if we're going to have like a big push on the US dollar. US dollar is also in critical area as well. So it's interesting. We'll see what happens at this block if it does come down there. But right now we don't need to worry about that because we have a bullish day right now. So we have a lot of room. We got to come all the way down from 1920 to get down to 1910. So that's about 100 pips away. So let's see now if on bullish, where could we possibly be moving to? Okay, so one area that I always recognize is kind of this red candle. 50% of it is right there. So we're right at it. That's our high of the day. So I'm going to place a purple line at the high of the day, the wick, and it's also 50% of this bearish candle. If we do continue to come up and we start to fill, then where could we go? One area, okay, are the bodies. you can see a lot of touches over here. We have a body here, a body here, a wick touch right here, a body here, a body here, body here. So that is a pretty good area. 1925, nice psychological number as well. So let's put a yellow line there. So if we continue to fill up today, maybe 1925 will be our resistance, and if we can just pop it and look at where we could easily go to 1930. And that's yesterday's high, 1930. And then when you look across here, that's where it held. That's where this body closed above 1930. Then we had this big bullish ignited candle. And in 1930, you can see wick rejected there, a wick there, a wick there, a wick there, a wick hold here. So 1930 is a good area. And then what do we have above us? Okay, fair value, like above this wick and that body, that's maybe where I can find maybe where the supply is still sitting in the market that hasn't been tapped up there, right there. So I'm going to draw like a red box, maybe just 1935 to 1930, just to give me a heads up if we're coming up there that we still have lots of selling pressure coming down in the market, still pushing down. We could pull all the way right back up to here, and then all of a sudden it goes right back down. And then we'll see if it builds like a small W pattern in here, ready to possibly break out of here. So right now, we're kind of back into this zone where it's consolidating. If I bring this red box back across, you see how the bullish candles, the wicks drive right into the red box and go down. They drive into the red box and they go down. This one impulsively broke out, pushed above, but we're right back below here. We came up on Wednesday, got rejected. We came up yesterday with news. We got rejected, lower high. We could be coming up today, but we'll see if it's a lower high today, and maybe we push back down and see if we exhaust our candle. But inside the volume, today's high and low, if we're just trading inside here for Friday, and we're just maybe it's a choppy day consolidation, this is another key area, 1915. We have to place a yellow line right here. Because this is a critical area. There's the body that closed on Wednesday, the transition into Thursday, and then also over here you have like a body over here, a body over here. So 1915 is also a critical daily area. If we're coming down bearish, maybe we're going to see if we can hold 1915 today to hold that bullish volume. If not, then we're going to start to come down. Okay, so just going through everything, we are trending down, like overall higher time frame is trending down. But we might be pulling back up currently. This could be a counter trade on the daily. So counter trades sometimes don't last long. We'll see where it comes up to. But now what I'm going to do is I'm going to break down this daily candle. So some traders go into the 4 hours. You can definitely do that. Even if you look at the 4 hours are still trending down. Even if you do a 4-hour trend line from up here to that point, you can still see if you connect them, like right here, if you still want to keep it consistent, like if I was to keep it consistent with those wicks coming down, that wick right there, there was a little bit, I can see right here, it kind of impulsively broke out, closed above, but then they came right back down red. And right now you see our 4-hour candle, it's going to close in 1 hour, in 12 minutes. And we're right at that trend line. So we're going to see if we can get 4-hour volume. See the purple line? That's our high of the day. Can we get 4-hour volume closing above here? Maybe we can work this area. Maybe we could see the next 4-hour volume come up to 1925, maybe 1930. But if they continue to reject this, then maybe we're going to push right back down on the 4-hour candle, continue trending down. But that's our 4-hour trend line. It is making lower lows, lower highs, lower low, a lower high, a lower low, lower high, lower low, lower high, lower low. This might be another lower high, or potentially if it closes above here, it might break the trend and we might come up to here. Okay, so it is pushing down. If we look from like over here and connect the bottom, you can see it's kind of getting into a wedge. So maybe wants to come down, then it will squeeze out of here. So that's our big 1900 demand box down there. So that's our 4-hour level. We can go to the 1 hour. Okay, so now our 1 hour candles, you can see how they're trading in the 4-hour wedge. We're coming right back to the top up here. How have we been trading? So now if I look back, the Asian session and things like that, now I rewind it back, I look back, how was gold trading yesterday? Over here, like, is the Asian session. Then we come back up last night into midnight, right over here, push down. Now we started this bullish momentum at 1 a.m. Eastern, going into pre-London. Right here is 2 a.m. It's continuing to come up. Hourly volume closing above this daily area. Then we opened London, continued to push for a high. 4 a.m. retracement, higher low, come back, higher high. Now we're trading sideways. This is the consolidated area. 5 a.m., 6 a.m., 7 a.m. We're getting that bullish push again. So what we're trying to look for is above this area, the purple line. Like over here, you can see that there is resistance. And our last few hours, you can see where it's closing, like right below there. So I'm just going to put a red box right below our daily level to let us know that we got to look for some volume to close above this trend line above here. If we have an impulse breakout, you could see where it could possibly impulse breakout to this wick and these bodies, like right up here. If we have an impulse, that's almost 1922 on an impulse breakout right up there. I'm going to just draw a white line for an hourly impulse resistance right there. And we'll see if it gets rejected, and then we start pushing down. Has the hourly built a little bit of support? You can see like right here, where it came up right up to here, 1916, pushed down, then 1916 turned into support currently. So 1916 level is where there's some hourly support. If I do something like this, over here it was green. See those wicks, how it came in there? Over here, it's red, where it got rejected, went back down. Now we're green, we're above it. So if I bring this box across right above like 1915 to 1916, we can see that it's still holding as hourly support in here. So we'll see if we're going to bounce around in here. We're at a very critical possible breakout. So these are the paths on the hour. We can break out here, close above, break that trend line, that 4-hour trend line, use this as support, and maybe we see gold come up to here today. Okay, that's one move. Another move is we're just going to consolidate in this box in here and bounce around in here. You can scalp this zone, 1915 to 1918, 20, 30 pip zone. You can scalp in there, or we might see it maybe get rejected. And today we break, we push down here, we retrace this, it's resistance, and then we push back down to 1910, maybe come down to here. Okay, so we have some news on gold. Gold will move, but it is Friday too. So guys, if you want to like kind of use this chart for trading into next week, now you know like how we're moving on the daily 4-hour wedge. We have our hourly candles coming right back up. Every time they come back up, they're just getting pushed down. Every time they come up, they're getting pushed down. They come back up, they're getting pushed down. So now when we came to the bottom, it pulled back up. They pushed it down, but we have a higher low building since midnight. It's coming again, it's coming up. They pushed it down. The sellers are getting a little bit weak here, and then now the buyers are trying again to break it through here. So there is a little bit of hourly momentum that is building on gold. So we'll see again what happens here. So we can like now, if you want to be a 15-minute trader, okay, so you use your same grid, and now these are the 15-minute bars. Some of you guys enjoy trading 15-minute. You can trade. There's guys in our group too that trade 10-minute candles. You know, some of you guys ask me, Ron, can we do 10-minute candles? Because the guys in the group do it. So it's kind of not as like as slow as a 15, not as fast as a 5, but 10 might be the sweet spot right in the middle. So yeah, sometimes guys, if you want to do 10-minute candles, we can do 10-minute. We can watch those. It's just whatever personal preference you have. There's some guys that trade a 7-minute candle. You know, you can do whatever you want, but you use your levels. So the 15-minute candles, if you're a 15-minute trader too, there hasn't been good opportunities since 5 a.m. Just red, green, red, green, red, green. Just it's consolidating. Okay, you can see how tight the range is, but now it's starting to open up again. It might be like a double top on a 15 where it comes up, where it came up. There's our neckline. It's coming up again into that red box daily. Maybe they do an impulse, they break it here, and then they bring it back down, and then does something like this, and then drops down here. That's a possible path, but we'll see if maybe the 15-minute candles are starting to get strong and break above here, and maybe we're going to push a little higher. So we could also do like a trend line on the 15s and watch how it is on the 5 minutes. And so if we go to the 5s, now here's the 5s. Okay, so when it came down here, It went right back up. Came down here, higher low, went back up. Came down here, higher low, go back up. Came down here. That was a nasty candle. At what time was this? At 4:30. So the new 30-minute candle. Look at, if you were buying, buying. You held that trend for that couple hours. Look at 4:30 in 5 minutes. They come all the way down. They take out pending orders, and then they come right back up. And they made a new high, but it wasn't too much volume. Then it pushed right back down. And you can see our 5 minutes, where we're holding 5-minute support. All in here. Look at where more of the bodies are clustered. Like above here. That was the liquidity grab. It broke and came back up. And we're still holding this range. So it's still holding very tight. So this is what we're going to watch. Inside here, now it's decisions. Do we want to scalp inside this zone right here? To me, it's not ideal, but for some scalpers that trade like 1-minute candles and things like that, they like this area. It's ranging, just measure it. From, if you're trading from the bottom to the top, like here at the bottom to the top, it's approximately 15 pips, maybe 20. So it's just, this is not ideal, okay? We don't want to trade too much choppiness. We want to trade better volume that's flowing through here. So that's gold currently. If we draw like a trend line from down here, it's moving up. If we connect it where it is right now, it's still moving up. So short-term trend line is still holding. This is that overall bigger trend line. Okay, and then if we add some moving averages, okay, so now with all that being done, I've just done my analysis, okay, with no technical indicators. So if you want to complement your trading with a technical indicator, if you use RSI, what is RSI doing? Okay, so RSI is above 50. Number one, when we're above 50, this is a strong strength. This is an area of strength. So it's in there. So we could maybe possibly continue to push up bullish. It could come all the way back down to 50. And then it's a neutral area. And when we're trading in there, we're right back in this consolidated box. And when it gets to 50, it's just neutral. It's like a coin flip. Anybody can take control. The sellers could step in and take control and push it down into weak territory and start to make it get oversold down here. It could just come down to the 50 again and pick up strength and come again higher. So do we have like divergence? Is there anything that we can see here? Not really in the market right now. So that's your RSI indicator if you use that. If you use moving averages, some of you guys are familiar with the 9 and the 200 EMA. The 9 is this green line. We are currently above the 9, and let's add the 200. So the 200 is below here as well. So we're typically still bullish. We're above the 9 and we're above the 200. Okay, so those are our indicators. We will watch gold. And also, this is BookMap to complement our gold, and this is the live futures. Okay, so you see how the numbers do not line up. Like right now in the futures, we're trading at 1951 contracts. These are the futures contracts. And over here on CFDs, we're trading at 1920. Try not to focus too much on the numbers because they're not going to match up. But focus on like the liquidity, the price action and things like that. That will help you a lot. Okay, you can see now there's a block in the market. See this big red rectangle right here, right over here. So it's showing us a heat. It's showing us there's a lot of liquidity right here where we could be trading into right over here. So we'll see if this liquidity turns, if it transacts, and then if it turns where the bids fill in here. And then there's our next liquidity up there at 1952, and that is typically our high of the day up there. This white line is the VWAP, the volume weighted average price. It's like a 2-in-1 indicator because it gives us a reading of the volume and the price combined. So it's a really nice indicator that I like to use on BookMap. It's not the same to use a VWAP on like TradingView. It's a little bit more lagging. This is more live, real time. And these yellow lines are just some like resistance from the past where gold couldn't break, and this was the support where it was holding. Right now, currently, we're coming above here again, and now we're consolidating right above here. You can see how the candles are moving. Red, green, We might get an explosive move, but we might have to wait for some news as well. It's almost 8 a.m. We have one more minute, then we're going to get into 8 a.m. A new hourly candle will open. That hourly candle might bring in volatility as well and change the way the market is moving. And then we have 8:20 COMEX market open and 8:30 the 2 PPI red folder news. Okay, and then this indicator down here, this is cumulative volume delta CVD. Current reading is 272. What does this mean? This means just if you add your, like if you're doing just addition, so your sells minus your bids, like and then what is the total. So right now we don't know what type of transactions these are because they're all pending orders. So they could be buy limits up here, there could be buy stops, there could be sell limits, sell stops, there's stop losses for buyers and sellers. There's a lot going on in here, so we kind of can't really see what's going on in there. We just see that these are pending orders in the market. So this helps us identify what type of orders are transacting in there. So right now, currently, more of these, the majority of these transactions are leaning towards buy side liquidity. So that's why gold is slowly moving up. Okay, and you can use this, but it's not always the best indicator to always follow, because sometimes it is moving up, but you could have a big supplier who is absorbing all of this, and at some point, maybe with volatile news or something like that, as it pushes up, there's a big supplier absorbing at each level, and then later on will dump it all down. So you have to be cautious and careful with all types of indicators, is what I'm trying to say. They are nice, they help with confluence, but some traders are just following this, and it's not always 100% accurate because we don't know too much what's going on behind the scenes. This tries to give us a little bit of an indication, but you don't want to just buy when you see green here, or you don't want to just sell when you see red CVD, okay? Because we don't know how much accumulation is occurring. Okay, so before we get started, is anybody in a trade right now? Is anybody, like on gold, okay? So we're going to focus on gold together. Is anybody in anything? And another thing, if you want to draw like a Fibonacci, okay? So if I look now over here, midnight, okay, that was our low. And then all of a sudden we came right up to here is our high. So maybe we're trying to catch like the retracement that came down and building back up. If you use a fib tool, there's various ways how you can plot this. But if you just go from like the 1912 right here, the midnight low, and then gold's bullish move all the way up to our high of the day, right up there. We can see when all of the pullbacks here came to the 382, holding. Now we're closing above the 236. We might push all the way back up here. If it ever comes back down, okay, so there's the 236, the 382, the psychological 0.5 is right here at around 1916, right where the 200 EMA is. And then where's our 618? Look at it. It's right in the middle of our demand box. You see, there's the 618. So that would be maybe a possible good buying opportunity for gold if it ever did come down into there at some point. Like if it gets rejected and it comes all the way back into there, that would be a possible good area, maybe good value to buy gold in that daily demand 618 if it holds, and then maybe it bounces right back up. So do you want me to leave the fibs on the chart, guys, or is it is it getting too busy? And then if we start to break up above, we can add our extensions above there. Too busy? Okay. But if you guys want to add your fibs, you can add your fibs on it too. Bronson, why would someone sell gold? We are in an uptrend. No, that's correct. But gold was in an uptrend here, and someone sold gold and brought it right back down. Gold is in an uptrend again, coming right back up. That supplier who sold right there, that pushed gold, might still be in the market, ready to push it down again. And then if it comes down with more supply and it breaks right here, then it will drop. But yeah, there's always going to be Bronson. There's always going to be sellers and buyers in the market, no matter what the trend is. Okay, because there's market makers who need to make a market. So there's got to be sellers at every level, and as there is buyers at every single level. But then wherever the imbalance is, wherever there's more sellers or more buyers at these critical areas, causes continuation in moves and things like that. But yeah, right now it's currently bullish. Like from here up to there, higher high, higher low, higher high. We're still holding higher lows. But now we're going to see, can we break for a new higher high and extend the continued uptrend? But there's not always, Bronson, there's not just traders who sell just to get a couple candles and go down. There's players in the market who add sells at each level. They're adding positions. They're positional traders. So they might add some sells right here, and they're in drawdown. And then they might add some new sells right here, and they're still in drawdown. Then they'll add big sells up here, and they're still in drawdown. And then when it comes right back up, they're going to add more big sells up here. Then when it starts coming down, they've recouped all of their liquidity, and now they have multiple sell orders in the market. And if it starts to come down, then that's when the heavy supply comes in. So when I'm talking about a market maker, they're not trading like us. Okay, they've got tons of liquidity, tons. So they can add a little bit here, they can add a little bit there, they can add, and they don't really worry about their drawdown too much because they do it with hopefully proper risk management, and they're adding positions in the market. And eventually, when they want to push it down, they have enough orders filled at each level to take it down. Like you and I, to do that, if we were adding a sell here a little bit, another sell there, we would get in trouble. Because if they keep pushing it up, you and I, we don't have maybe enough leverage or enough capital to continue to hold that, then our accounts get blown up. But institutions, I'm sure that they have enough capital to continue doing what they're doing. Okay, so we opened up, guys. It's 8 o'clock. We have a new hourly candle. What I like to do too is, yeah, I like to trade 5-minute candles, but I also like to look at what's going on the hourly too. So these are our hourly bars. They pushed down, came back up, neckline, came down, coming back up, push up, close above, hold this zone. So now we're trading in here. Green, red, little indecision at 6, come up green. We're trading now right at that 4-hour trend line. So we're going to see, is this hourly candle going to hold? You know, let's go through the motions. Can it hold 50% of the previous bar right here? From open to close, that's roughly half of that hourly candle, 1918.50. Like right there, that's half of it. Will it hold in there? So if I just do like a half line right here, a red one, halfway. 1918.50. Now when I go to the 5 minutes, there's that red line right there. That's the hourly support, or the hourly 50% level from our previous hourly candle. So this hourly candle just opened. We're going to see, can we hold this? So what I like to do is, like right here, I draw like 50% of this candle that started at 735. It's green, still holding. So right there we can have a little bit of a green box. And we're going to see if this can continue to hold this structure in the market. And if it does, then maybe we're going to continue building, and we could break, fill this wick, and that's our daily high on gold, around 1920. And then what's above here? Okay, the next white line, that's our hourly, 1921.80. But the 5-minute price action, it's right over here. Last time we were trading in here was in here. You can see where we kind of came all the way out. Look at all the resistance it had right there. How many times did it get rejected right here? 1, 2, 3, 4, 5 times it got rejected at 1920.50, and then it came out a little bit higher and went right back down. Again, we came back up to this area, 1920.60, that same area, and pushed down. So if I'm just looking for maybe where gold could maybe impulsively break out to, right there, 1920.65. And then it lines up across the chart right there with some bodies. So it's kind of just understanding where it could possibly go. So if it breaks our daily high, it could impulsively break right up to that red line, 1920.60, and we'll see what happens up there. It could come right up there and get rejected and come all the way right back down. Or it could push, rejected, but then we're using this area as daily support, might turn into support. This big block might be all the bids, and then we're continuing to drive right through here, and gold might be continuing to be bullish today. Okay, and guys, if you're going to trade too, please, I know some of you guys are getting better at this. Make sure you look at your spreads, okay? Going into news, going into COMEX, sometimes it's not worth trading. There might be an amazing setup, but spreads might turn into 8 pips as a scalper. So maybe it's, even if there is a nice setup, sometimes you're so far behind that maybe it's not, you shouldn't be taking it. There's always good time to trade after news, so like think about it right now. We're going to get lots of volatility in 10 more minutes and in 20 minutes. Do you feel comfortable trading it? Okay, everyone has their own comfort levels. Like I can trade volatility. I'm not trying to be big macho man here or anything like that, but I'm used to trading volatility. I've been doing it. I love volatility. Like I love trading 1 minute candles in volatility, and I don't risk my entire account, so I can kind of handle it. But there are some traders that have never traded volatility, and can be very, very crazy. Like watch when we see Wall Street open today. We'll see there could be some really erratic moves. It could range, it could pick up pending orders. If you're not ready for it, it could cause a lot of anxiety when you're trading it. You can maybe panic. You can so it's not for everybody. If you don't feel comfortable trading news, just watch what's happening and then maybe trade after the news. Honolulu, we'll do Nasdaq, we'll do US 30. We'll do that right after gold. For right now, we'll concentrate on gold, and then we'll do quick analysis on US 30 and Nasdaq, and get that ready for Wall Street. So we'll stick with gold right now. We'll watch what it's doing. So look at right now what's happening. So really, really bullish, nice move. So see that block, that red box, kind of got chewed away by all those bids right there, and they're continuing to take it right back up to that previous block that was right there. But do you see how they removed it? Remember how this box was going right across, right up here, and kind of just got pulled out of the market, and then there's the new block right up there. Okay, so that's where they removed pending orders, and the bids could maybe continue to drive right through here. So what happened right now? That's our daily high, okay, the purple line. They're moving it to the daily high before COMEX market open. So this is interesting, like to watch what they're doing right now. So that's our daily high. COMEX is 8 minutes away. That's the commodities exchange open, and then we're going into news at 8:30. So let's see what they're engineering. Let's see what they're doing. Are they going to continue to take out highs, and maybe then it will come down with news or market open? How are we doing for RSI? So now it's coming up to 70. But remember, what can happen is they could continue to squeeze and push it up here, because now we're at our daily high. So if you're not in a trade, let's watch what's happening. And someone's going to say, Ron, why didn't you get in? Why didn't you buy this candle? You can absolutely buy it if you want. I'm not telling you not to buy it. I'm just telling you to be cautious, because there is market open coming and news. So let's see if this bar with the new high, where will it close? Is it going to close above that purple line right there, the purple high? If it does, then what we got to do is with this red box, we can momentarily flip it green, and what that will represent is the bids below us in the market. So this is the depth of market. It's starting to fill with good bids. See CVD now, remember when I was just talking about it, I believe it was like around 320. Now it's 440 because a lot of these transactions are net buy orders. And if you're in buys, okay, I know some of you guys are in buys, I would recommend like a trailing stop loss to protect what you've earned just in case something happens during market open. Don't like, at least protect your initial capital. Okay, number one as a job as a trader. It helps making trading easy when your capital is always protected in a trade. Okay, so we have 5 more minutes to go, and we're going to lead into COMEX market open, the commodities exchange. So this is an area of short-term support we have in the market right here. We could also measure right now 50% of that bullish candle that just pushed right through the high right here. There's about half of it. Is it going to hold, continue to hold support right there? Or are we going to lose this support right here? So remember this big red box, this was the hourly resistance that we couldn't break. And now we actually broke the hourly resistance. So this area, the big red box, we can make it the green support area, continuing to go forward. So it's all of these bids below us. We are currently above the VWAP. Kind of broke out. So see where we were consolidating when we kind of started the call, this yellow. So we broke out, consolidated across, continuing to push for a new high. And this is the strength reading. Okay, so we broke above 70. There's a lot of traders that will start selling just because it's above 70. If you're doing that, you got to recognize that you're doing it right before a commodities exchange open. So just be careful. Okay, yeah, it could come down, but be ready. Okay, so now they're rejecting it right up there. So remember that red line that I put up there? It didn't hit it, but it came very close to it. So that was kind of maybe the impulse break of the daily high, that red line where I got that from looking to the left of the chart. And now we'll see if it can hold 50% of the body, if it's going to start to break down. And we'll see what happens. Okay. If you're going to get ready to trade, I would advise everybody to go to your platform and check your spreads on gold, okay, and make sure you have the right lot sizing in for this particular security that you're going to trade. I explained, Darshan, the fibs. What I would have done is from this low to that previous high, and then the 618 was right into this green box. And then if it continues to push, which it just did, I would maybe grab the fib extension tool and extend above here to see how high it can go. Okay, guys, so is everybody all ready to go? Is anybody in trades right now going into COMEX market open? Nope. No. So just, yeah, if you guys are, just be careful, okay? So it's coming down now, okay? So it came up for that high, almost up to that level, that 1920.50, 60 level, and a big red bearish engulfing candle coming down with 60 seconds to go. leading into the market. So we did come right, spike right up there, coming right back down. So let's see with momentum what they're going to do with this. Okay, it might come right back up. We'll look for maybe like that double top rejection and come right back down. Okay, 45 seconds. So you see, guys, like even if you bought in here at 8 a.m. and you took it all the way up there, that's a nice buy, nice scalp buy. Like it's very nice, 15 pips. But you see how one candle, like right before news or market open, can just come right back down. So let's see how it reacts at this level. Maybe if it comes back up. So remember 50% of that. Now we got to flip that red. See if it holds below there. We're right back down to the VWAP, right in this area. So here we go. This will be COMEX market open in the next 5 seconds. This is the commodities exchange open, spreads. Look at all these things. Okay, so we opened bullish. Okay, look at it coming right back up. Let's see how it reacts at this red box now. Okay, so see the volatility. It came all the way down, closed at the low. Look at that big rejection. Okay, so this area now is acting as the resistance. Okay, so what did they do? Did they just fake out the high going into COMEX market open and bring it all the way down? Okay, so if you're not trading right away, let's maybe watch how they close this bar. If you want to get into a trade, there's a nice rejection and coming down. Maybe I'd like to see if this body can close below this green box, because then we're right back in this mumbo jumbo area where all of this consolidated area was happening. So then it might just come down in here, might come back up, and it might get really, really erratic in here, like right inside here. Okay, like look at this. Okay, you got to be careful. This is a exchange open, so it came all the way down there, coming right back up. That's why I'm waiting to see where at least this 5-minute candle can close. It's coming right back up, so you have to be careful. Okay, I'm telling you, it's Fridays can be very, very tough to trade like this. And yeah, and red folders news coming, yeah, in 7 minutes. So just be cautious, okay? There's opportunities if you like what you see and you want to trade it, but sometimes just being a little patient. Let's just try and figure out what they're doing. Okay, so they came down, they took out the low again here, but it's still a higher low. Now they're coming up with, they broke the VWAP, they picked up the bids, now they're coming right back up. So it's coming right back up. Let's see now with the volume, can it close above that daily purple line? Maybe we can look for the next candle. So again, this zone, this one, we're currently above 50%. If it closes back above here, I'm going to make this big red box green again. So we can see maybe they came down, they picked up all the bids. Now they're coming right back up. Again, let's watch. Can they close it above that purple daily high? 1920 up there. My barcode might go green, red in here for a little bit. But right now it's still pushing. Two more minutes to go. So our previous high, like here in the book, right up here, we got to watch this level. "90 seconds to go." So came up there again, lower high, they pushed it right back down. Where will it close? RS, welcome. Good morning. Welcome. What is my opinion about trading indices on 1 minute time frame trading zone? I love it. I love trading US 30 on the 1 minutes. Kind of like a 3 bar bend. Yeah, we'll see. We'll see if it can complete it, close above, maybe retest here. Maybe it could also open ignited right before news and continue to push up bullish. So just keep in mind, guys. Okay, we're 5 minutes away from red folder news. So if you're taking any trades, the news will also bring in volatility. So please, guys, I just want to stress that. I know it's a very nice bullish candle, but if we're trading, understand your risks too, because in 5 more minutes then we're getting those 2 red folder news announcements. So some traders just they wait until the news. So it's kind of tough like this when we're trading COMEX market open and then there's red folder news 10 minutes after. But if you trade gold, this is how it is every single day. Okay, so here's our close. We close near the high, red, come down. Is it going to hold this green box right here, the bigger green box? Okay, so I'm just going through the motions again. It's coming down red. Is it going to retest and hold this area? Okay, so it came down, still respecting. This could break out of here, and then if it does, that's our hourly resistance, that white line, 1921.80, 1922 area. That's hourly resistance. Right now, gold is looking to push above this area and fill. If it does, above the red line, there's our hourly fill up to there. If it continues to break above with news, if you guys are in buys or up to here, 1923, and then we have our daily at 1925. So we're currently watching this from here to there to there. That's kind of our trend line where it could possibly come up to there. There's divergence if you're looking from all the way from here coming down there. The strength is decreasing as it keeps going up right before news. Okay, so listen to what I'm saying. The momentum is making a high, a newer high, a newer high, leading into the news in 3 more minutes, and there is this divergence from over here that's pushing down. Okay, so be careful. Elengo, spreads on gold is 4 pips with MFF. Yeah, spreads are gonna fluctuate with all brokers, with all prop firms. It's gonna start to get volatile. So that's another thing. If you're gonna trade, guys, spreads as well. And then this is the news, guys. Okay, right over here. So it's two more minutes and 43 seconds. Core PPI and PPI month over month. Red folders. Okay, so that it will affect gold because it will affect the US dollar. If you're trading GBP USD, Euro USD, it will affect those currencies as well. Okay, so a minute and 45 seconds. So what happened? Let's just review what happened. Okay, so 8:10, they brought it up bullish. 8:15, they brought it back down. COMEX market open exchange, they came higher low, big bullish engulfing candle, close up here, and then final 5 minutes came back down, holding the daily purple line. So right up here, the daily purple line is still holding, and they're pushing it up bullish right before the news. So maybe it's going to come up and then maybe push down. I'm just cleaning up my chart, getting ready for the news. Okay, guys, so it's going to get volatile. Okay, so get ready. We're 30 seconds away from news. Okay. Ten more seconds. Okay, so now they're coming right back down, right back down. So it's barcoding, green, red, green, picked up the liquidity coming down. It's getting volatile now. Okay, so here comes the news. Look at the big, look at BookMap. Like this is not, yeah. Be careful. Okay, just go through the motions. Let's flip this red. Okay, yeah, it's gonna push down maybe. Good sell. It might come right back up. So I'm just going through the levels here, guys. Yeah, sell was a good sell if you took that quickly, but just going through here again. Let's see maybe where it comes up, and then maybe you can catch a retracement. If it breaks, it's dropping. So that was fake engineering buys up there, going into the news. Yeah, so it's pushing down, guys. Let's see if it can break this block. Okay, it's testing this block. Picked up the bids in the block. Good numbers, good numbers. Okay, good numbers, good for US dollar. Gold dropping. Probably GBP, USD, and Euro are dropping as well. Good numbers, strong US dollar. So you see if you were in those buys and you're holding into the news, they just suck you in, and then boom, they bring it down. Okay, so we have 3 more minutes left. Let's see what they do. Okay, it was an ignited red bar, just continued to break, broke this level, came all the way down to the box, right into our box. Okay, that's that 618. Remember, if you added your fib from the low to the high, it came right into the 618. Okay, and now it's got the wick coming right back up. Let's see where this volume closes as well. Okay, sometimes pipping and dipping, you got to be fast. If not, you got to sweat this candle out. I want to see where it will close. Okay, so did they come down, take out all these orders? Are they going to come right back up with it? It's going to close down here, maybe continue pushing down today. So you see, guys, how trading like COMEX and news, how crazy it can be. What am I waiting for in order to open up a trade? I'm not waiting for anything. I'm waiting for a possible opportunity, but I don't want to trade all this craziness with high spreads. Why is that so hard for people to understand? If you want to trade this, go ahead and trade it. I can wait till 9 o'clock to trade. I can wait till 10 o'clock. I can wait till 11, 12, 1, 2, 3, 4 p.m. to trade. Why do I want to trade all this craziness? If we traded that, okay, if we went into a sell, you know when it came down quickly, right there, would you have exited in 20, 30 pips in a minute? Because you remember that wick where it came right back up. Like, don't remember what happened here. Okay, if you went in a sell, would you have got out within 1 minute? Because if you didn't, it had that big wick that came right back up. I'm not stopping you guys from trading. If you want to trade, you do what you got to do. Look at the analysis. You can see. If you like what you see, go for it. This is a big block right here. Okay, that was a big block. Okay, so we got 30 seconds. Remember, that's that 618. Remember when we placed our fibs from the low to the high? That's the 618 right in there. Came down to London's open, yeah. Oh, GU. Okay, so here's the close. We closed right below the 200 EMA. Are they going to open it green and come right back up, or is this going to come down bearish, fill the wick, and really drop? Let's see right here now. Okay, so we have 5 minutes of the news. It's out. Okay, so it's probably going to maybe continue bearish. This could be a death cross coming in the market. Okay, I'm going to test out a sell now to see if it will fill the wick and break below here and drop a little bit. I'm going to go in for a sell on gold, test it out. With that news that came out, is it going to be negative on gold? Will it drop and break through here a little bit? See if it comes back and consolidates in this range, and then maybe I can like build an order here to add maybe another one if it goes down in my direction. Okay, I'm looking for it to maybe break this block to continue to push down. And if it breaks, it could possibly fill down to 1912, 1913 area. That's good for maybe 20 to 30 pips coming down if it can possibly get its way back down to break below here. Okay, so we're below the VWAP. We've got our order book above us. Lots of bids still in this area. Cool down that CVD a little bit from up here. Coming down back down to 400. I want to see if it will maybe break for a new low and close below here. And if it does, maybe adding another position down in here. If it can break down for a new low. And then I just want to go back down to about 50% of the news candle. Okay, 50% is like right there. So if it can still hold below 50%, or we could maybe possibly still hold below that 9 EMA, maybe just consolidate down in here, maybe flag a little bit, and maybe start to continue to break down if these offers can start to get filled over here. I'm in a small feeler trade, and then I will add if it goes in my direction. So there's a big cluster, okay, big cluster, lots of transactions happening down here. Let's see if the sellers can take control of it. Okay, so it did come up a little bit. It's pushing down, 60 more seconds. I'd like to see if it can come transact down below this block in here. So if we can break this green box, it could be a nice drop coming down. Here's the close. So we came up, still below 50%, got rejected. Still, we got this big block we got to work to bears got to work to take out. So didn't take it out with that candle. Again, we open green. It's possibly going to come right back up. Will it be a lower high? Okay, that's how high our previous wick is. Will this bar be a lower high? Okay, so we got currently a lower high. Like, that's what I'm looking for. Are these offers going to absorb those buyers and maybe continue to maybe push down? There's a lot of liquidity down here, a lot of heat down here. So like maybe the selling pressure can maybe push down to come down into this area down in here. That's what I'm looking for. If this block can break, because if it can, then they're going to maybe come down and pick up the liquidity down in here. We don't have too much heat above us. The heat is down here. That's where the liquidity is. So does the market want to come down to trigger these orders? Two more minutes to go. So we got it rejected with a lower high wick. The sellers are absorbing, but there's a lot of buyers like interested in this block. Okay, it's a serious area. It's been a block all morning and like yesterday if we look into it. So that this could be a big break in the market if we get it. It could just hold and then continue to come up. So I'm watching my stop loss as well. But this is the moment of truth. It's turning into a shooting star. Can we break that low and close maybe below here? Possibly we're going to hit some bids. It will pull back up. And then maybe if we get rejected, then we can go in for maybe like another multiple order. We'll see, guys. Okay, it's not easy. It's not easy. This is a big block we're trying to break here. But there's all the heat down there. Like you see, there's no heat above us. So Does the market want to come down and hit all these pending orders down here? Then it's a possible sell situation. But you also got to remember that it could come down, pick up those orders, there might be buy limit, and then come right back up. So that's where we got to then flip the box red and then see if the offers in the book come down to complement that move. But here's the close in 45 seconds. Yeah, the 618 zone is right in there. So you remember when we put our fibs from this swing low to that previous high, the purple line? There's where the 618 is, guys, right there. You see it? At 1940, that's what we got to watch. But this could be a break of the gold and drop. So I'll leave the fibs on so we can watch it here going into the close as well. But that's a sell candle. Like, that's the kind of candle we like. It came up, got rejected, came up, got rejected, and now can we take out that low and maybe possibly close below here? Okay, so we're right at that 0.5 fib, coming right back down to our previous low there. Okay, so there's the close. We just closed, ignited bar. Can it take out the low? And it might come down to this 618, maybe come back up. But if we do, then I want to flip this big green box red, and maybe we can push down a little further. But you see how it's coming to that liquidity down there? Let's come on, get in here. Let's push it, and then maybe some supply can take it out. Okay, but that's the pullback. Okay, we're going to get pullbacks, obviously. 0.5618 demand zone, there's going to be pullbacks. But what we want to do is reduce the pullback to maybe a small indecision candle, or come up to the 382 and continue with a lower high, push down. So this is the big block of truth. But if it does pull up, maybe it pulls up to the 382 or this area right here of supply, like lowering it, you know what I mean? Like lowering it right down to, oops, it's right here. Okay, get ready, guys. This is where it could break. It's getting ready. You see how it's coming down there? Maybe to take out that liquidity. This is maybe like if you want to kind of look to add an additional order, but this area is very, very critical. But let's see if we can break it. Coming down 3 more minutes. We have the retest. It came up 50%, lowered the supply, pushing down. Let's go with this. Yes. Come on, push. Let's see if we can break that 618 and come down to the 786. To that red line was previous zone that I was looking for. But let's see if we can continue to flip this big green box red now. Lower the supplies. You can go to a break even if you're in this with me. I took the sells in here. Okay, so there's now a big block there, 1946. It's the 618, okay, right there. But can we push now with maybe, let's look at the 30-minute candle. Okay, so our 30-minute candle, can it push a little bit further? Our 30-minute support, like right over here, is right here, 1913.50. Can this 30-minute volume push maybe down to that red line? We got a new 15-minute candle that just opened. So news was very bearish. We're in this, okay? This 15-minute, yeah, here we go, guys. Beautiful, okay? Pushing down. You can secure if you want on the way, but let's see where this body will close in 90 seconds. Can it close below the 618 and maybe continue, retrace, and push down? But we came down to that liquidity pool, okay? So there was no heat above us, it was below us. That's why we're selling into that liquidity. Beautiful, guys. Excellent, excellent. I'm going to secure a little bit myself here. Yep, perfect. Coming, oh, nice, 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 nice. There we go. Thank you, gold. Okay, guys, I got out 20 plus pips. I took some multiple sells as it was continuing to push down. Picked up almost 1,000. And I'm out. That red line, that's my target, that 30-minute support line. That's it. Okay, whatever happens after that, I don't really care. But I can follow it now, like continue if I want to continue trade. Let's see where it closes. Okay, some of you guys are still in it. Let's see if it closes below the 618. Let's watch it. Okay, so close below 618, coming above, bring your supply down to here, a little bit above, a little bit below the 618. Yep. Yeah. See, as I did that, a little bit above, a little bit below, continue drop. Guys, extension, perfect. If you guys are still in it, yes, there it comes down to the 786. Oh man, the woulda, shoulda, coulda, I coulda held that. It's okay. Some of you guys are. You guys get your pips. Okay, but look here too. Look at the double bottom. This is where you got to be very, very careful. Right here, where it held, coming across. Okay, if it doesn't break this area, this is where you might find some buyers reverse it back up. If it cracks this area, could drop really, really nice. Okay, so everyone was asking, Ron, why did you wait? Why didn't you take any trades? I didn't want to trade that garbage. I liked the news, the sell, and then I got in on these bars coming down. Perfect. Good gold for Friday. Excellent. So now it's possibly going to be consolidating down in here at this 786 and your 618 zone down in here. But this is where it might bounce, come right back up. But when it comes back up, it might pull back into supply. Like now we're pushing down. It might pull back into supply and might push back down into here. Okay. But on a move like that, please guys, just secure on a Friday, grab some pips, leave some runners if you can. Yeah, New York could possibly reverse a move. Iliad, you're yeah, you're correct, bro. Okay, so it did have that extension push down to back down to this block order, and this is where it's coming right back up. Okay, so and now we're going to go into 9 o'clock. Okay, and then we're going to move over. We're going to do some analysis on US 30 and Nasdaq. I'm going to move away from gold. See how ugly my charts get? Like they get ugly. I'm telling you, because I have a lot of zones. Okay, but do you understand what I'm doing? I'm trying to understand where the orders, like the blocks, are in the market. Okay, so this is the bigger red block. This is the previous one. And you see those wicks that came up? I was in sells. I held that one, but then it came right back down. The next one, when it came right back up, and then I added another one. And then the retest was perfect confirmation to come down. This is how my charts look. They look ugly, guys. They look ugly. I admit it. They are the ugliest charts probably any trader has seen. But, I'm not here to make like fancy charts. I need to understand where the zones are. That's why I do this. So I'm kind of embarrassed with this chart right now, to be honest. Someone is probably gonna make fun of me, but it's just how my mind works. Because before I had live liquidity, this is how I used to trade. Okay, and I still trade like this. I had to develop and find my own blocks. I had to find my own zones. So it was very difficult with just traditional candlesticks. So that's why I developed this type of style, but after a while it looks ugly. It looks ugly. But you see how it's coming into this red block. If you use a fib, the 0.5, and then it just got pushed down. So let's see if it can come back down, consolidate here, and maybe continue to break down. But BookMap helps a lot. So you see why I was adding sells? Because there was no heat above us. That right there. That's telling me that there's no liquidity above us. All of the liquidity was down here. So the market wants to move where the liquidity is. That's where the money is, right? So that's why I added some sells and held my sell into that liquidity. When it came in there, I closed my positions. I'm closing in the liquidity. That was my trade plan. That was where I wanted it to go, somewhere in that liquidity. I got out a little earlier. I missed out on maybe 10, 15 pips. I understand, but it's okay. For me, I added multiple orders, so I had to start closing them out. Okay, and if you don't do anything, okay, see how it can possibly come right back up. But if you're playing it, like if you got a trailing stop loss, this is your next block. This is your next zone. And now we're currently like below the VWAP, so it might come right back up. We might work this area and it might come back down. Liquidity equals money, Eliud. Liquidity equals Masari. Yes, sir. You got it. Okay, so we want to go where the liquidity is. Okay. So, sorry guys, before we're going to go into Wall Street right now. At the end of the call, guys, I want to go over this with everybody to make sure everyone has the right mindset going into the weekends. Remind me to go over this before we end our call today. It's going to be important. Guys, these were my trades, okay? So I hit a double for 20 pips, a standard for 32 pips, another double for 20 pips, and then a little feeler that went for 34 pips. So those were the trades right there on gold. So guys, if you're in this, please manage it. I'm going to move over, if you guys don't mind. We're going to do 2 charts of NASDAQ and US 30 going into Wall Street. Okay, so if you guys are in this trade, please manage it accordingly. Proper risk management. Okay, we did good on gold on a Friday. Just reviewing it now, like could we have bought going in? Yeah, absolutely we could have, but would we have dipped out? Because if we didn't, the news would have reversed us hard. So you see how they engineered it? They were pushing it up. Look at what they did here. They took out the previous high, okay, 810, 815. Comex pumped it up, and news it came, boom, gold drops. So that's why sometimes if you follow how they engineer the moves, you might be more successful at trading, as opposed to just getting excited when you see like a green candle. But understand what's happening at the high of the day, where they're kind of engineering this move. And then when we go back looking at the news now, does it make sense now when we look at the news? Okay, so what happened with the news? Remember, they were forecasting 0.2. It actually came out 0.3, 0.3. What is that? Positive. What does that mean? Remember when we looked at the folder? Actual greater than forecast is good for currency, is good for US dollar. So if we go back and we look at like US dollar, sometimes you can do it side by side. What happened with good for US dollar? Good for US dollar, news, DXY pushed up. Excellent for US dollar. And what happened with gold? Bearish for gold. That's why we went in sells. Okay, so do you guys see now how the pieces of the puzzle, they all add up? And then also the divergence. Okay, remember when I was saying it made the high and it took out the next high? There was divergence, like pushing down. That also gave us maybe some confluence to sell. Okay, always go over and review. Right after you take a trade, go just when you're out of the market, go back and review it. So then right there, you learned how to possibly trade news. Okay, we're going to do US 30, top down, and NASDAQ. Is everybody okay to move on? It's almost 9 o'clock. We got 90 seconds to go. It's 9 o'clock. Do you guys want to do 1 chart or 2 charts? I'm going to ask you guys. One chart or two? Two charts? Okay. Two charts. Let's do that. Okay. While I'm doing my charts, do you want me to leave BookMap on gold? Or is anybody still in gold? Do you guys want me to leave gold BookMap while I'm doing the top down on the indices? Or do you want me to switch to Dow on the BookMap? What do you guys want? You guys tell me. Dow BookMap? Okay. Okay, perfect. Okay, let's move on. Okay, so now in the book, what we're looking at is the Dow. The way how I kind of set it up is, see the increments right now, 845, this is the bigger one. We could go like this. These are the 30 minutes. So I can see 7:30, how it was consolidating at 8 o'clock. Come in here at 8:30, news. They start to drop it. Bring it right back up, dropping. So we're starting to see how it's really moving. Look at where it was. The CVD was above like 200 positive. Then the news just brought it right down to negative 634. So what are we pushing down right now? Are they going to then push it right back up during Wall Street? So this is going to be interesting. Okay. So again, let's go through the motions. If you made some pips on gold, what do we want to do? Do we want to conserve those pips? How are we going to trade Wall Street open? It's a Friday. Just be very automatic, guys. Be like a robot when you're trading. Just go through this all the time. Okay, so now what I see is this level that held as support here broke and act as resistance. So I'm going to place a yellow line here for future reference, maybe might come into play when we're in Wall Street. So see what I just did there? Just like a support line. That's support, it held, and then with news at 8:30 it broke, it retested right up there. There's some buyers stuck up there and the market moved away and it's now trading. Now look at how big the heat is. Lots of liquidity. So this is where the institutions are loading up before Wall Street. Okay, if you want to be a player in there and you want to play in there, it could get really messy in there. So just be careful. Now let's just figure out where our low is currently. Right here. Charlie, yellow line, 35,150. That's our low. Okay. Now lots of CVD. All of these transactions currently are sell side. Okay, pushing down. Lots of big red volume bars. Okay, and now what we're going to do is we're going to go and do some top down on our trading view charts. I want to kind of get this done in quick 15-20 minutes because I just want to go grab a drink right after and get ready for Wall Street. So if I do this faster than normal, okay, I'm going to try and explain but do it a little bit quicker. So any questions before we go? Abdel, can we review when we took a position on gold? I will at the end of the call. We'll go over exactly where I went in. It was after the first 5-minute candle of the news so just if you want to look at it right now, that's when I started to enter. As it started pushing down more, I started to add more sells. Okay, so on the daily on US 30, let's get into this. Okay, wow, look at how it's been trading on. So we've moved away from that double bottom. We came up here. Now it's just been trading real messy inside here, okay? Also like yesterday, look at yesterday. It opened, it was very bullish, came up to here, then they brought it all the way back down and they closed it right here. Today we opened up. Okay, so our high of the day for US 30. Let's go through the motions. We did this with gold, and that's why we shorted at the high of the day. When it broke, they took out the liquidity, and then we sold after that. So today our high is 32,257. See where it's coming down, picking up the bids now, coming right back up. Okay, what is our low of the day? 35,088. Okay, so inside here, but look at our where we could possibly break today. Okay, so if we continue to break our low of the day, maybe we target right here, 35,000. 017, 35,000 flat psychological area right there, yellow line. Why here? Because that's our most recent low. It was on Tuesday. Look at how it's like 50% of this body right there, and right below there we've kind of got when you're looking for that gap in the market, like a fair value gap, it's right there. Like that is a big block, like right there. Okay, so on the daily, that's your you know, when you're looking, this is all tapped, this is untapped liquidity. It's a big volume based bar that opened, ignited, and continued. There was a lot of orders that never got fulfilled in this move coming up. So maybe like they want to bring it back down, tap into here, grab some orders, and then maybe come right back up. Okay, that could possibly happen. You know, those are unfulfilled orders sitting in the market. But that's maybe too big of a box. Okay, so what we're going to do is we're going to kind of move it up to here, to that yellow line, and up to maybe this body right there, and bring that across just to show where our daily. And then what I do in there is I draw 50%. Okay, right in there, a yellow line. If we continue to push now and it goes down bearish, where's our next level? Next level is right here. There's a body, a wick, and a wick. Push down. That area used to be resistance. Right here, it got rejected. Right there, it got rejected. Finally, volume closed above and pushed. And then if we ever do come back down into this zone again, whoops, what did I just do there? Sorry about that, guys. Those are fat fingers. Okay, so just drawing my levels below us. That was the resistance. There's the double bottom breakout. If it ever does come back down there, maybe it will use this as support and bounce as a buy right there. So we got some levels below us if we continue to drop bearish. What happens if they pick it up today and we start moving back up? Okay, so where's some critical areas in between the purple and the purple? Inside here, there's a lot of noise going on around here. This is where we closed, we opened this area right in here. I'm going to draw a yellow line in here just in case we continue to come up. 35,206 is resistance. If we can break that high of the day and we continue to push, maybe up to 35,320 right over here where we got this area. Bodies, body, 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 body. Okay. So what is the overall daily move? Okay, we came back up, lower high, pushed down, no new lower lows. Okay, that was a higher low. Then we came up, a higher high. This is where it gets real messy. Indecision, coming back down. Okay, so our daily candle, we opened, we came up, high of the day, pushed down, higher low, and we're right here. Okay, so let's go into 1 hour now. Okay, hour. So now I look back, okay, over here, 2 p.m., 3 p.m. yesterday, come back up in the Asian session, push back down. It's around midnight now. Coming up, here's London. So it came up. So our high of the day was London's high, okay? So London's high is our high of the day. And we continue to push down, come back up, lower highs. So we have hourly resistance right above that critical daily level. So right there, red box, right there, that's hourly resistance in the market. And since then, we broke this level. So this used to be a critical hourly level. Look at the next push down, that wick. So I'm going to just draw a white line down here in this area. This push down, back up. Push down here, back up. Right now, we close below there, equal lows coming right back up, like right over here, where they came into all of that liquidity, and now the bids are bringing it right back up. So where are we going to close going into Wall Street? So over here, this area right here, that used to be support. Support, support, maybe might turn into resistance going into Wall Street. So let's watch this area. I'm going to draw another red box right here. We're coming right into it. What are we going to do? Are we going to push and close above this and maybe break out bullish? Is it going to hold below here? We still have 50 minutes to go for this hourly candle. So we'll see today what happens. Maybe if they exhaust this and push it down and we start breaking down here, it might be a sell-off day. US 30 might be selling because all we got to do is come down to fill that wick. and break that 35,000, and then we drop down into here. Okay, so what's going on right now in the hourly? If we draw like a trend line from here, from this move that's coming down, continue pushing it down. That's our hourly trend line coming down. I'm just going to do a white line for hourly. And then from over here, like this, we had a higher low. They got it, a higher low. It was real close, but they got that higher low. So we're pushing up right now. Let's go to the 5 minutes and watch this thing now. So what has been developing? Now we're going to watch how it moved into the news. Okay, so right over here, it was trading inside this box, consolidating. Then we get into 8 a.m. The news drops. Okay, so the market reacted with the PPI numbers. So the US dollar strong. So the market reacted bearish, and then it pulled right back up at 8:30. Sorry, the news at 8:30. Let me do this again. Sorry, right over here, 8:30. The move pushed down, then we rotated right back up at 8:45 into this zone, got rejected, continued to push down. Now that's our daily low down in here, where it picked up all of these bids, and we're coming right back up. We're going to see, so Wall Street. So what I'm going to do is I'm going to let it trade, how it's trading. I'm not trading it right now, so I'm going to obviously just let it trade. I can see right there, 3 times it held down there at our daily low. So there is some good support there holding. Maybe we break this at another time. I want to see if it will now continue to consolidate in this range. Will the volume stay inside this big red box and green box here going into Wall Street, or is it going to start to maybe break out slowly above here? Is it going to come back down? So wherever it's just consolidating, I'm going to let it consolidate. Let's add some EMAs, okay, just like we did with gold. So our 9 EMAs, this green line, we're currently above it. We fell below it there, but it's coming right back up. So we'll see how we trade inside here. And where's the 200? The 200 was holding the entire time. So it came up to the 200 around 5:45, pushed down. Came to the 200 again, 6:30, pushed down. Came up again, 7 o'clock, pushed down. Came up again, 8 o'clock, pushed down. Finally with the news, they really hammered it down, but it's coming right back up. So we'll watch in here how it is. I'm going to do NASDAQ as well, guys. Okay, so we'll keep US 30 right over here. And let's do NASDAQ really quick, because I just want to go grab a drink and just get ready for Wall Street. Okay, so NASDAQ on the daily, a little bit different. It actually had its double top up here, break, close below, continuing to consolidate, ignited bars. Yesterday, bullish day in the market, tweezer tops, push down, break the low, close right here. And today we came right back up, 15,200 approximately. Right up there, that's our high of the day. Pushing down. Okay, so continue push down, but now we're trading into these wicks back here since July 6, 7, 8 in here. So we're going to see if we can continue to push down. Okay, so we're currently at our low of the day. Now, if we break, where could we go? Just like if this was a 5-minute candle, if it impulsively broke down, where would it logically go? Possibly right down to here. Okay, so just treat this daily candle as if it's a 5-minute candle. Okay, same thing, same analogy. Yes, it's a daily candle and it's got 7 hours and 47 minutes, but it's a 5-minute candle, pretend, trying to break a critical support on the 5 minutes. And if it does, what does a 5-minute candle normally do? Might fill these wicks and come down to where there's some support. So for us, on a daily, it's a bigger move, 14,918. That could be one area, but before it gets there, another critical area are these 2 wicks that held right there. So before it can get to that next one, what if it comes down here today and stops right at that yellow one and goes back up? So this is one it needs to break, then the next one. Then if it continues pushing down, there's our next one, 14,860. Maybe Friday today is going to be a sell day, but coming down to here, there's the wick, body. Then what do I have? This big bullish candle that started that big move. That's kind of like my block. I like to look at 50%, a little bit like right in there, and bring it across. Some of you guys do the whole entire body, like as the fair value gap, but I kind of like to keep it more consistent at 50%, and then I judge what happens in there. So that would be like my demand going across on the daily for NASDAQ. And then look at the daily resistance above us too. Okay, so over here, see these wicks that impulsively broke above a couple times right there too, rejected until we got that big bullish candle close above. If I bring this zone across, you see how it's red and it's lower than where we are today. So I can bring it right down to our purple box, purple line, the daily, and draw it red right there. So if we ever do come back up and you have an impulse breakout on daily, it could go there, 15,367. But we don't have to worry about that right now because we're trading inside here. Now, if we trade again inside here today, okay, what if it doesn't break lows or do anything? Maybe it's consolidating in here today. We got some levels inside here we got to watch, okay? What about like these bodies? Okay, a yellow line right there. I could come up now a little higher now. See where I can manipulate it? I come up to these previous two bodies and then it lines up with right there. Okay, and that could be now our daily area. If we do come back up, maybe we got to concentrate what happens at this yellow line at 15,127 today. And this area too as well, like right here. See this wick and yesterday's wick, Thursday and Wednesday, right in here. Let's draw like maybe a yellow line right inside here too, because that might come into play. Like right now, coming up into Wall Street. Maybe we come up to that yellow line, 15,080. Maybe it continues to drop down. But looking at the daily candles, lower low, lower high. Yesterday, a big bullish candle, but they exhausted it hard and brought it all the way back down and then closed right here. Today we opened, came up, big wick to fill. So it's not like a short wick, it's a big one. So it came up, got rejected, and now the volume is pushing down. So daily pushing down, bearish. That's overall sentiment, so let's see if it continues all day today, the hourly candles. So if we draw like an hourly trend line, you can see where did 10 a.m. yesterday, okay, they brought it up. Since then, it's been pushing down. Okay, so it's trending down. It came back down here, lower low in the market, pulled right back up to a lower high, continue push down, no new, so it's consolidating. It came up again, and then they started to push it down London, consolidate, and then the news drop, and then we're going to see what happens in Wall Street. Are they going to bring it up in Wall Street? Are they going to bring it up a little bit, and then it's going to continue dropping today? That's what we kind of got to watch for. And then over here, like you see from here, to here, like how are we still moving? We'll see how it comes into this area. And then when we look to the left of the chart, if we start breaking, where could we go down to? So you see the hourly, how it held at that yellow line, and then the next one coming down to that yellow line, and then we got a big block. So this is how I kind of set up my grid, so I know that these are critical areas, depending what time frame I'm trading. If you're an hourly trader, these are your zones, okay? What we got to look for now on the 5 minutes, let's go into the fives, see real quick how we're moving, okay? So the fives right here, London starting to drop, pulled back, continuing new low, held at that critical daily line, come right back up. There's our 5 minute resistance, news, big drop, pulled back. Okay, if you did 50%, hopefully you did that, like right here. Even just using this area, okay, the yellow line right there, that was green box, it held. Bring it across, red box, volume below. Look at those two wicks that came into the red box, similar like how we were trading gold. It came right into that red box, and that's why I continued to add more sells. When it got rejected, ignited bar, 845, pushed down. Now we're coming right back up. Look how it's coming up to the zone too on the 5 minutes, okay? Look here, this was support, red box, go across, okay? You see how they're lowering the offers, okay? This was a big block. It came into there, retraced right back up, pushed down, broke, and now we're retesting this area that used to be support, turned to resistance. Now we might consolidate from here to the daily purple low, going into Wall Street, okay? And we're going to see, are they going to break it out of here and continue to come up? If you're like scalping this move, you know, this is a big zone, like for a scalper. From here to here, just to fill up there is about 20, 30 pips. If it comes up to right there, 50%, okay, look what I do here. Okay, 50%, like here, this area, where there was support right in there. This area, support, 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 right up there. 45 pips. It might come up to there and push right back down. So I kind of get my levels. And then above that daily area, that's where the 5-minute got rejected. That's where the 5-minute got rejected. Draw your red box zone going across. Make it like a grid all day today. And you can trade the volume all day in these zones if you like. But you also have some quick little take profit areas like right here if it comes up there, because this area used to be support turned to resistance. If we push down below here, then where do we go? It's higher time frame. So we've never been down here. So I have nothing below the purple line on the 5 minutes. On the 15s, here it is. So now I dissect what's going on below the purple line and the yellow line. Now we start to read the tape in here. So I start to look at these 15-minute pivots right in here. Here was one pivot. Okay, you can see here where it came down, back up, came up, back down, came up, back down. Holding here. So that's one zone. And it's kind of 50%. If I'm just looking, if I didn't know, when in doubt, just go 50%. Purple, yellow, what's half of it? If I'm just looking, there's probably half. Okay, but I'm looking exactly at some pivots in the market. And go back to your 5s. And then you have like a zone below where it could possibly drop down to. So right there, if it breaks, it might come down to that red line and maybe go back up. It might break and continue to push down. Okay, so I'm going to leave NASDAQ side by side with US 30 right over here. What time is it, guys? 9:20. Okay, so I'll give you guys these charts in the Zoom chat 1 second. And if you guys don't mind, I just got to go to the washroom real quick and just grab a drink, and I will come right back and we'll get ready for Wall Street. Okay, thank you guys. If you can hit the likes on YouTube as well, if you're getting value out of today. Guys, everybody, just go take a break really quickly if you can. Go grab a coffee, go grab a drink, go to the washroom if you have to. We'll be back in like 3 minutes, okay? Thank you, everyone. Okay, guys, so we're back. Okay. Okay, is everybody ready? Grab the drink. Okay, so we're in this consolidated box right now on US 30. We're consolidating as well. Maybe could be possible bearish flag for NASDAQ, but also the build up too. It could be coming down, back up, down, maybe back up, maybe push like through here. But we still have that supply pushing down from the news. And then, guys, we got to go through the motions again. What do you want to do? Do you want to are you going to trade right away the first couple minutes of market open? Are you going to wait for a 5-minute candle to close? Are you going to wait 50? Everyone has their own rules. Just make sure that you follow your rules. Try and follow the rules as much as you can daily, and then that will help with consistency and things like that. You want to just try and have a little bit more better days in the market than you have bad days. And slowly, you are going to get much better at this with practice, with experience. Everybody will get there. Okay, and we have the Dow on BookMap again. So we are below the VWAP, which is traditionally bearish. Lots of liquidity in this area, okay? So let the market players do what they're going to do in here. Wow, over 1,000 viewers. Thank you, guys. Amazing on YouTube. If you guys can hit the likes. I see some of you guys are not getting value out of our channel. That's okay. And then let's take a look again at news, okay? Because we got 5 minutes. Let's prepare ourselves, okay? So everybody take a deep breath. Everybody take a deep breath, okay? And let's see. I'm not in any trades right now. We traded gold, got in and out, made some pips. Now, what's going through my head is what I made in gold, how much of that am I going to risk on market open? Am I going to risk it all? Am I going to risk half of it? Am I going to risk 25% of it? You know, these are all things. It's a Friday. Again, ask yourself, how did you do today? How did you do this week? How much are you willing to risk on market open and trade Friday afternoon? The best thing to do on a Friday, in my opinion, is to go into the weekend on a positive note. Not just trading, just in life, just general. Weekends are a beautiful time to be with your family and relax. You don't want to go into the weekend stressed out. You don't want to go in thinking how much money you lost or this or that, or just try and take it easy on Fridays. Just in general, in life too. You know, don't ruin your weekend for trading. It's not worth it, okay? Believe me, we've been there. We've done it. I don't want to see you guys go through that. It's not worth it. Okay, just try and trade very smart on Fridays as much as you can. And it all goes back down to risk management. Okay, so what we got to do now is, what do we have coming up? Obviously, Wall Street open at 9:30 a.m. But then this at 10 o'clock, we have the prelim University of Michigan Consumer Report, red folder 2. So we have to know about this going into 10 a.m. because it's going to get volatile with this news as well. Okay, so that's all we basically have today. And then if you're going to trade later this afternoon in Friday, might be a Friday sell-off. It might be a Friday setup, bullish move coming Friday afternoon for maybe how the market is gonna set itself up, engineer it for Sunday, Monday. So that's the thing. If you've hit also daily goals, this is the hardest thing about trading. I don't know why it's so hard for us. When we hit daily goals on a Friday, we could be done at 10 a.m. and then we're like, what do we do with the rest of the day? Because the markets are open till 4 o'clock. So we want to just sit and trade, but try and get in the habit of going and enjoying your day. That's part of trading. The reason why people trade is remember what you guys said, your number one reason to learn how to trade was for freedom. Freedom to do that. Now, when you're hitting your daily goals, you have the freedom to do whatever you want. So start to enjoy that freedom. Learn what it feels like so you can get a taste of it and say, Ron, I want this the rest of my life. And it all comes down with discipline. Because if you don't, then you know the drill, guys. If we make a couple percent, then we go back, we get greedy, we end up losing it, then we go back to break even. Human behavior is when we go back to break even, we can't stop, we got to go back in, and then you turn a 2% day positive into a minus 2%, and you got to sleep on that, go into the weekend with that, when you didn't even have to put yourself in that position in the first place. It took me years to learn that. I don't know why it took me so long, but I learned, and if I can do it, you guys can too. Just understand that hitting daily goals is very impressive to do it in these markets if you can do it daily. And a realistic goal, 1%. 1% could honestly change your life. You could live a very comfortable life when you learn and appreciate 1% per day. That 1% could be more than what you're making at your current job, if you do this right, guys. Vito, Chico, I love that. Like that's my saying. I say it for like always. Singles and forget about hitting for the fences. I like it in a baseball game. Yankees won championships. Singles and doubles. Here we go, guys. Okay, market open. Okay, it's volatile, so I don't trade right away. Okay, let's see. Big bullish candle. Is it going to come back down? Like it's crazy right now. Okay, it's a lot of liquidity happening in here. Go to your MT4s. I got to change your lot sizing, right? I got to change my lot size from gold. Now trading this. Okay, so I changed my lot size. I'm ready to go. I'm watching what's happening. We got a NASDAQ, okay, tech, ignited, red bar, pushing down. Remember that red line that we were looking at right there? US 30 opened green, coming back. Is still in the box. Let's let the institutions grab the liquidity, and then it's up to us to figure out where they're going to move the liquidity. Right now it's too hard to tell. It's heat everywhere. So like with gold, it was a little bit easier to kind of see. Now look at, they picked it up. Now they're pushing it down. Are they just going to push it down? Everyone sells and then it goes right back up. So but the market is continuing to sell off. It came up, lower high, pushed down. Did it take out that low wick yet? Not yet. Okay, look at where my cursor is on US 30. Has it taken it out yet? Not yet. So it might be a higher low. So you got to be very careful. See how it's coming right back up? See how it's coming right back up? Careful. See where my cursor is? Did it break 35,078, that previous low? No, it didn't. So you got to be careful. Now it came back up, collected more offers, now coming back down. Will it come down now with these offers and break it? And if it does, we got a new low in the market. Yep, there's the break. So now I flip this green box red for the moment. And then we got 3 more minutes to watch where this body will close. Some traders love taking this trade and they're in. That's their trade. But yeah, and then there it goes. That's a big drop, guys. But you see how they grabbed the liquidity at the market open, brought it down. It came up and broke and dropped. Okay, so that's like I personally love that move, but I'm trying to be a little bit more conservative with you guys. That's 35 pips, just from the break of the wick. That's like Ronnie's signature move. I love that Wall Street move. But pip and dip. It also goes with that, like if you're going to take that, don't be scared to dip out of the market with 30 pips with zero drawdown. Unless you're holding. But when you're holding, okay, now you got to go through those emotions. I was just up 20, 30 pips. Now it's coming right back up. Oh my God, it's coming to my break even where I entered. Am I going to draw? So it's those emotions that traders go through. So if you don't trade with that volatility, stay out. I'm still out. Okay, I'm still waiting. So you see what I mean? It dropped 30 pips. You don't do anything. The woulda, shoulda, couldas. It can rotate right back up. Okay, that's why I did NASDAQ, that red line. It came all the way, broke that red line, and it's coming right back up. It's like an indecision candle, market open. So it's right back in the box. So we maybe have to be conservative in the box as well. The only way you got out of that trade was pip and dip. If you didn't, you're holding in drawdown. Okay, and you see we're still in this, all of this liquidity. It's getting messy in here. Let the institutions do what they got to do. You and I, we can watch unless, again, pip and dip. Is everybody okay still? I know some of you guys, I know some of you guys are getting real aggressive and you guys love those setups, but hopefully, you're dipping out of there too. See, these are those days. Sometimes you dip out, you get out ahead, you get out positive. Some days you get out and then it keeps dropping. That's why every single day you just got to go with how the flow is, how the market is moving. So that's why I don't trade with oh man, if I held today, if I didn't do it today, every day is going to haunt you if you think like that. Okay, you just got to make a decision while you're in the auction at that time and be happy with it. Okay, so what happened now? We closed again above. Remember that white line? That was hourly holding. Now it's coming up bullish. Okay, so what did they do? Did they take out the low liquidity at the low of the day, the purple line? Maybe they took out the low, grabbed all the liquidity, and now they might be bringing it up. And it could look like maybe a double bottom now. Like here, one, there's the neckline. Forget about that liquidity grab. We know what they did there. Now it's a double bottom coming up. Let's see if it can break out of here. Maybe retest this, and then it's driving bullish to take out that purple high. That could be one possible path. And I know some of you guys are scalping inside here. I understand that, okay? But there's other traders who don't feel comfortable trading like that. So I'm trying to be as patient myself with other traders here too. But I know you guys are all over this in the sniper group. 15-minute is barcoding. Yeah, 15-minute, but it's building. It's building. So red, green could be pushing out of here. The bulls are bringing it out. Okay, so here it is. Maybe the push out. It's got to break this high right here, 35,169. It got up there, but can it really take it out? And if it does, there's the 200 and that hourly trend line and this big red box. But let's see if it can make its way into this zone, and then maybe we can flip this green, see if it holds, and maybe today it's going to be maybe a nice bullish day. Nasdaq opened, took out the low of the day, purple line, grabbed the liquidity, and it's coming up like a double bottom too. Okay, look at what they did. Okay, so coming all the way right back up. Now what's happening at the VWAP? 35,200. Let's see if it starts to collect all the bids, hold here, and continue moving up. That's why I'm watching for volume to also close. Kind of don't want to take an impulse yet. It's hard to say what the overall trend of the what the market is. It is bearish. Okay, it is pushing down, but it could maybe fill up to this area, to the high of the day, and we see what happens. But again, it's still in the box. Okay, I know it's exciting. There was a lot of quick trades to take, but not everybody wants to trade like that. Okay, so we got 2 more minutes. Let's watch the close. Okay, with all of this momentum, where they came down, they grabbed all of that liquidity, coming up real strong, this momentum should have enough to break this high. If it doesn't break the high and it stays down here, then the next bar might open red and come down with some selling pressure. So it's got to, at least with this momentum, take out that high right there. Same with Nasdaq. It's got to take out that high, at least create a new high.
So now we're trading again at that VWAP. Bennett's having a hard time with the 50 EMA. Yeah. See, careful, guys. Careful. Careful buying breakouts when it's not taking out a high. Okay, just be careful. Careful with the Nasdaq as well. Okay, it came up nicely, guys. You know, don't be scared to maybe secure a few pips or have a trailing stop loss. But we're falling for full continuation here. Siddharth, how much lot size should you use for a $5,000 account? No idea for US 30 and Nasdaq. If you have no idea, you're saying it right there. If you have no idea, go to a demo account. Why trade a live account when you have no idea? You said it yourself. I'm telling you, go to a demo account and figure it out. If you're asking those type of questions, I hate to be that person, but I'm sorry, but you're probably gonna lose your money. The market makers love people like that. Just go to a demo for 1 week. You'll figure out exactly what you need to do. Nobody wants to hear me say go to a demo account, but I'm trying to have your best interests at heart. I'm trying to help you out. If you don't know these simple things, what lot size to use for a specific security, or don't just jump in the markets with $5,000. What is the point of that? Go to a demo. Learn how to do this. Doesn't matter how much money you have. You could have $5 million, and if you don't know what you're doing, you're probably going to lose all $5 million. Okay, look at guys. We have another red bearish candle. So they're barcoding red, green, red, lower highs pushing down. Could Tesla dropping? W more, thank you. So Tesla pushing down. Let's see where this closes. Also, 15-minute bar. If we haven't traded, let's watch the 15. Look at the 15. Look at it. How messy it is right now. Okay. I think we should stay patient and wait for this 5-minute candle to close and see where it is. It's just ranging. Okay, we're just still in the box. Okay, so still hasn't made any big moves. Yes, there was some quick scalps here and there, but majority of us are not trading like that today. Okay, so let's continue to stay inside this box. We've got 10 a.m. news coming in 20 minutes. See, it's just difficult. Okay, if you sell, it comes right back up. When you buy, it comes right back down. That is pure indecision in the market. Let's try and avoid this and be smart on a Friday. Okay, we made some pips on gold. Let's not just give everything away. If there's no trade to be taken at this time, there's no trade. Just because it's Wall Street doesn't mean we all gotta jump up and down and hit the buy and sell buttons. Let's just be smart. You got 0.5%, Sean. You're heading to your 95. Take care, bro. Enjoy your day at work and enjoy your weekend, Sean. Impressive what you've been doing lately, man. Impressive, man. Keep it up, man. Sean is hitting goals while doing it, working a 9 to 5. Perfect. Definitely progressing. Yeah, Sean, we've had our discussions. It's not easy, but we got to find what works for you. Got to find what works for you. Once you find your rhythm, you find your routine, the rest is history. It's just finding that routine. How do you balance trading with your work life? How do you balance trading with school? How do you balance trading with dedicating time to your family and friends? It's not easy. Trading is a balance of everything. Once you can balance everything, the trading will fall into place. It's once you have an imbalance, it's difficult to figure out how to trade. It's not easy. You got to find the balance. It takes years. It takes years of preparation to figure it out, guys. That's why you got to dedicate a few hours in the market and be disciplined with those hours, and be disciplined with, like, whoever said I have $5,000, what lot size should you got to learn. You got to learn. Go on a demo and just test out some lot sizes, and you'll know right away. Okay, so US 30 came down again, respecting here, coming right back up. We got 45 seconds. Nasdaq is pushing down. Did it take out the low? Not yet. Still hanging around here. Okay, so coming right back up again. So US 30 came down. Look at all the sellers that got exhausted down there. Okay, they were trying to sell, but the bids now are coming right back up. Going into the close, now take a look at our 15-minute bar. Look at it filling back up. Remember, it was down here in indecision. Now it's filling right back up. Let's watch where it closes up here. Okay, so we closed right here. Red open, ignited. Let's see. Now let's just go through the motions. How is it going to react at this 9 EMA? Okay, do we have any big bodies that are holding like a fair value? Not really. It's too much wicks in here. Okay, so it's indecision. It's tough to find a nice body. It's coming back down. Okay, so it's just careful, guys. Okay, this shit can really stress you out trading this. You could go into a buy and it comes down. You go into a sell and it comes right back up. Okay, let's just be patient inside here. And it's a Friday, okay? So with that too, do not get frustrated trading this. We don't have to be frustrated just waiting. We have news coming in 15 minutes, big red folder. That might shake the market. Right now, what the market could be doing is accumulating for the news. And then once the news drops, they will redistribute all of this volume. I promise you, it's probably going to either break out bullish, trade inside here, or break down bearish with the news. Okay, remember the three laws of physics. Where can it go? Those are the three directions. So the market, a supplier is accumulating and a buyer is accumulating. At some point in time, they're going to release this. Nasdaq is pushing ignited bearish down. Okay, there is a little bit of bullish divergence on the 5 minutes. Okay, it made a low, new lower low. There's bullish divergence now on this RSI indicator. So just be careful. It could be coming right back up into the box. If it closes down below here, maybe we'll drop a little further. I personally trade US 30, guys. Okay, I try not to trade Nasdaq as much. I traded it yesterday. I was up 15 pips. I was waiting for this snail, to this slug, to go to 20, 25, and then it came back down and stopped me out. This thing is a slug for me. Scotty, I don't know what it is. Yoda always makes fun of me. He's been trying to get me trading SPY and Nasdaq all my life. I hate it. I personally hate it. I don't know what it is. I don't know what it is. It's something about Ms. Jones that keeps me coming back to her. I don't know. I'm an old man, so it's an old man index. That's why maybe I trade it. Nasdaq is for the young guys. This is for the old men over here. And old ladies. Sorry, and old ladies. I don't mean that disrespectful. I mean wise. Wise. This is for the wise men and the wise ladies. Wise, Lisa, wise. That was the word. But you got to know its personality. You got to know its behavior. Just let's look at the range. Let's measure the average candle right now. Okay? Average candle. 50, 60 pips is the average 5-minute bar. Okay? So remember, if you're trading inside here with a 10, 20, maybe even a 30 pip stop loss, you're possibly going to get stopped out on every one of these bars unless you dip out of the market. Okay? So that's a big stop loss. Some traders can't trade with a 20, 30 pip stop loss. So just be careful trading in here. Look at the size of the candles. They're big range candles. You can obviously see the market makers picking up lots of liquidity. And if you want to trade with them in here, you have to be very careful. Ian, DAX is the real giant. I agree with you. London is DAX. Okay, now we're coming right back up. So remember the white line? That was our hourly support. Still respecting it. Coming right back up. We're at 950 now. So we got to ask ourselves, do we want to take a trade now, 10 minutes before red folder news with this type of volume? Maybe it's best we sit on the sidelines. Unless there's a quick move and you know to get your pips and dip out of the market, because the news could change up everything. Okay, so again, just let's not ruin a Friday, okay, is what I'm trying to say. Just be careful. Maybe after with like PK at 11, there might be amazing volume after Wall Street, after all of this, after the news, maybe 11, 12, 1, maybe even power hour today. There might be better volume to trade. Don't stress yourself out with this. I know it's exciting because it's the market open. We love to trade market opens, but sometimes like this, you got to just be a little bit more careful. And then if you want to come back later on in the market after news settles, go have breakfast, come back, and then see how the market, you might find that it's trading much, much better. See, it can't make up its mind where it wants to go in here. But it's slowly trying to come up, but every time it comes up, still it's not taking out a high. It's not taking out a high. So I think we should wait for the news to see what happens. I'll stay like 10, 15 more minutes with you guys. But at the end of the call, I want to go over something on Discord. So you guys can have the right mentality going into the weekend, some things to consider, and so we can come back stronger next week. We're almost into September, okay, almost. So the summer months are almost over. Summer drought, we call it. June, July, and August are some of the most difficult months to trade in the market, just historically. It's always like that. There's not a lot of liquidity in the market. Noim, no problem, bro. No problem. I hope you get the most out of SST. I hope you guys get the best education possible for free here on YouTube. And everybody on Zoom, you guys, we appreciate you guys. We work day and night for you guys to try and give you guys the best education possible, everything that we can do. I'm starting that new series. If I could, everything that I know today, if I could start again, starting again, 18 years old, how would I go about it? So I'm just trying to teach everyone all of the mistakes I made, knowing right now what would I do to fix it. This right now, see here, when the young Ronnie, 18, 19 years old, I was going crazy in this box right now. I was buying and selling everything, hedging, going in buys, going in sells, holding my buys, adding sells, just confusing myself, stressing myself out in here, over leveraging in here, and before I knew it, 10 o'clock hits and I'm down 2% and my account is gone. And it just, now me, the wiser, older Ronnie, just sit back and relax. This took me years to learn. And this was, you know how much this cost me trading in here? It cost me years of suffering. So I just taught myself, okay, if it's not happening right now, maybe I'll come back in an hour in the markets. That's what I've learned. That's why I like trading throughout the day. If I don't find something right now, I can always come back at 11. I can come back at 1 p.m. I can come back at power hour. I always know that there's going to be volume moving in the markets now. You don't got to go all in right here. Marcus, I love that, bro. I love that. Marcus just said the most expensive box is the consolidation box. That's bro, you said it perfectly. I can't explain that. This box can be, if you don't know what you're doing in here, this could be the most expensive lessons you're going to learn. I'm telling you the truth. This I learned a lot of lessons in this box, and it cost me a lot of real money. This is the discipline, guys. Like yesterday, I was disciplined too to not follow for those fake outs. But that one candle, that time and place impulse candle, I should have taken it. And then I waited too long, and then I got stopped out, and I didn't take out my 15 pips. So now I look back at it. Like there's always improvements that you can make. Even if you're still patient and you're disciplined and you wait for everything, there's still going to be situations that are not 100% guaranteed. Okay, but just if you're more patient, you still have a better probability of being more successful than not. Okay, so we just broke out again. It took out this previous high, equal high to that previous high. Okay, it's getting real technical now, and it got pushed right back down, right inside here. I'm not going to trade until we see at least some news or after. I know everyone wants to trade. Believe me, if there's trades, I take trades. But it's just, I don't see anything happening right now. Vito, you're right, man. I agree. You can't be successful without paying the tuition of making mistakes. In life, you can't be successful unless you take some risk. It's going to cost you. If you guys opened up your own business, not trading, if you guys took a risk and you put money in opening up a family business, or it's not cheap. It costs you money. You're taking a risk. There's no guarantee that that business is going to work, but you're still trying something. So nothing in life comes for free. Everything comes with risk, but you got to manage it. If we're opening up a business, how much money of our savings are we willing to put into it? Are we putting our whole life savings in the business, or maybe 25%? But if you do it, you might get the reward later in life. Risk to reward, how they say it. I've always taken risk all my life. Ever since I was 18 years old, I've always taken risk. I've opened multiple businesses. I bought rental properties at a very young age. I had no concept of, like, I just wanted to get my hands in everything and just try it. Go out in life at least saying that I tried it. You can be very, very conservative in life as well, but some people take risk and they get ahead, but it comes with a lot of headaches, a lot of financial, you got, that's, it's hard, guys. I had a lot of my buddies in COVID open up their barber shops. They put in $100,000 and they got shut down with COVID. They had an amazing concept, but they just shut them down, and they ended up closing, losing 100 grand. And now they opened it up again. They said, this shit's not going to stop me. And now they opened it up, and they're some of the most successful barbers here where I am. They've opened up 3 shops. They got their money back, and they're making some really good money. That didn't stop them. They knew what they wanted to do. The barber shop, yeah, it was about timing. They just timed it the worst time when COVID opened up. But they didn't stop them, So it's guts. You got to have guts to do something. I fully respect what they did. They came back and continued to open them up, and they're doing really great right now. If it doesn't break you, it can't stop you. Just continue. No one's going to give you anything in life. You got to work for it, guys. And I know you guys are. I respect everyone's hustle here. I respect all of you guys. Everybody here. You guys putting in this time in these markets daily. Yourself, if you're with SST, whatever it is. Respect to you guys. It's not easy doing this. Stay focused. Stay disciplined. I know some of you guys have lost a shit ton of money. We all have. But just continue learning. Make sure you learn from your mistakes, because if you don't, you're going to continue losing. Okay? Learn. If you've lost $10,000, if you've lost $100,000, if you lost $10, learn how to do this. Like the gentleman that came in and said, I have $5,000. How do I go about trading? What do I take? What lot size? Right there. I'm telling you, I'm giving you advice. Don't go in the markets trading. Go on a demo. Learn. These are the basics. Learn what a spread is. Learn what slippage is. Learn what leverage is. Learn what lot sizing is. Those are like the ABCs of trading. You have to know that. If you don't know that, you're not going to be able to trade. Don't learn with your $5,000. Learn cheap. Okay, be cheap. Be cheap. Learn with a demo. A demo is free. Those things are the mechanical things. You can learn lot sizing and things like that with a demo. You won't get the really raw emotions out of a market, but you can still learn exactly what is a lot size. Just giving you advice. Don't take it personal. Don't take it as Ron being rude or negative. I'm just trying to look out for you and help you. Okay. Most of us can probably agree with what I'm saying. I'm not trying to say it to disrespect you or anything like that. I'm just trying to help you out. Okay, here we go, guys. Okay, so 10 seconds, we got news coming. So it's a University of Michigan, the sentiment report, red folder. We're going to have some volatility with whatever you're trading right now. So let's watch. Look at, they gapped it up, bullish. Let's see if they just gap it up to take out the liquidity. Okay. Okay, so they tapped the 200. Look at where they gapped it up. It closed right here. They gapped it up, ignited. Okay, so flip this red box green for the moment. See if it can still hold in here. Okay, NASDAQ coming up, US 30, okay, still, we got this resistance, this red box, but if it breaks out of here, there's that high of the day. We could maybe catch a retest candle. That's if you want to trade this. Again, this is news, this is volatility. Careful with this, okay? Pushing back up. So it looked like it accumulated. The low that they took out the liquidity, and now with the news, they're pushing it out. Okay. What do you guys think? Are you guys looking for buys right now or holding off for this body to close? Some of you guys are already in. You took the ignited bar and just hopped right in. Marcus, you're waiting for 15 minutes? Okay, respect, bro. That's good. Let the noise settle. Yeah, it's News Friday. It can be crazy, okay? But let's pay attention to what they did here. They gapped it up, ignited. So on the asking price, that's why we got that big push come right up. We broke the 200. We came into the bigger red box. Lots of resistance right here, those previous rejections. But now with big volume that's been accumulating in here, what's going to happen with this? Okay, let's see maybe where they close it. Maybe we can catch a retest candle. This could be like a head and shoulder play today. Inverted head and shoulder. This zone, left shoulder. Our head, Wall Street market open, inverted head, came down, picked up the liquidity, swept the daily low, and now in here, if it ever comes back, trades in here, that's the left shoulder. We get the breakout. Okay. Where do you see it, Scotty? 35,500? Okay. What time? What are you looking at? The daily or the 4 hour or hourly? 1 hour. 35,500. Oh, okay. To clear up all there today. Yep, possible. Okay, but it's got to maybe, Scotty, got to pull back inside here, finish off maybe like inside here, and continue breaking out. Okay, so there's our high of the day right there. The purple high. That was London. Okay. So London's high. NASDAQ coming all the way right back up. Let's see if NASDAQ can close. Okay, so big move on news coming out of there. Gold, what's gold doing? Okay, so see London? That's London's high right there. We're tapping into London's high. Wow, Sherry, congratulations. You're up 2%. Good. Like you're steady 1%, 2% on the daily. Congratulations. Sherry, just shut the MT4, go and enjoy your Friday and enjoy your weekend. You're doing absolutely incredible. Yeah, I agree with you, Scotty. We need to close above London high on 10 or 15 minutes to move up. Otherwise, we're getting rejected. I agree. Look at how parabolic. Okay, so we broke above the 50 and just coming right back up. Just careful shorting this too, because there's a lot of volume behind this. If you're shorting this, just be careful. So all we had, okay, when we look back at it, there was just all of this consolidation. Just when Wall Street opened, they took out the low, and it was just consolidating in here. This wasn't the greatest box to be trading. Okay, so let's all be real about this. Now we look at it, we could have done this. That was trading garbage in there. Okay, so let's look back at it, and then all it is the news was a gapped up, ignited candle that just shot up. Okay, that's basically sums up how it's been in the last 35 minutes, from 9:30 to where we are now. There hasn't been really any nice move to trade unless you just hopped in right on the news. But sometimes that could be a very, very costly mistake. So don't always look at it like you missed out on something. Would you literally have been trading inside here like this? Lower time frames, yeah, you can get away with that. Now, it's careful up here. London's high. Are they going to take out the high, come back down, pull it back? It could pull back down into the 200, 9. 50% of the news body is right there. Is it going to pull back in here and hold, and we're going to continue to go up? It's holding ignited where it opened. Did it fill the wick? Not yet. That's London's high right up there. Nasdaq is maybe gearing up to potentially start moving as well. Flip this to demand. It's holding. Okay. If any buys, if you do anything, maybe a stop loss at 50% of the body or below here. But I'm still waiting to see what happens in here. See where it's slowly consolidating? Maybe at London high, right to that 200 EMA. Maybe form a flag right here. Let's see if it can form a bull flag and maybe continue to break out of here. But it's approaching overbought territory. So what normally happens is they'll take out the high, grab the pending orders, and bring it right back down. So just be careful here. See, like in Nasdaq too, impulse coming back down. Let's wait for the body to close. And I'm sorry guys if I'm not being as aggressive as I normally do trade. I want to teach discipline, guys. I want to really teach discipline. We could have traded every single one of these bodies. Believe me, if you guys know me, I trade everything. Okay, we'll do a day where it's called we trade everything. Okay, and just then I know that as long as everyone's on the same page, we're gonna trade everything. But there's got to be days where we got to be smart. Today's a Friday. There's news. If you guys want to take 100 trades a day, I'll do 100 trades a day. If you guys want to take 500, I'll take 500. We'll go to the 1 minutes and we'll clean up. But you got to do it with proper risk management. Me and Dave want to do where we mop up an entire day, 24 hours. I go for 12 hours and Dave will do 12 hours. We start midnight. I'll start midnight. I'll do the night shift. I'll do the graveyard shift. Midnight to noon, okay? And then Dave will come in 12 noon, and then he'll go till maybe 8 p.m. We'll give Dave till 8 hours. We'll give him or the Asian market till midnight. Let's do something like that, okay? If we get, Dave doesn't even know, okay? I'll say it. I think we're at 55,000 subscribers. If we can get up to 75,000 subscribers, me and Dave, I'm saying it right now, we'll do a 24-hour session. I'll go night shift. I'll go 12 midnight till 12 p.m. and Dave will take over at 12 p.m. and go till midnight. So subscribe to the channel. Dave, you're here. I didn't know you were here. He's probably like, what the hell is this guy saying? Oh man, 75K guys. Okay. And that will be a freestyle session. We'll trade whatever you guys want. We'll chart whatever, any time frames, it doesn't matter. That will be an exciting time. If there's concepts you want explained, we'll explain concepts. Whatever it is. Do you want to trade corn? We can do corn. I used to trade Marcus soft lumber back in the pandemic. Remember when Home Depot and Lowe's, where to do a fence, a deck, the prices of lumber were crazy? We were trading the futures contracts for soft lumber. It was it was really really fun. Um, yeah, we'll get into soft commodities. Okay, guys. So what time is it? 10:10. Okay, so if we're not in any trades, okay, be careful. Okay, Nasdaq did not close above here, so make this a red box. I think it's gonna consolidate till maybe like 11 a.m., maybe another hour. So we're right back in the box. Be careful here. US 30 has this bullish flag, maybe it needs to consolidate. Could be developing a golden cross. There's the 209. Maybe it dips back down into here, comes back up, and then we break out bullish. I would be looking for something later on today, maybe above London's high. This is London's high up here. Maybe watch up there. But I think guys, I just want to wrap it up with this. Okay, don't leave me yet. Give me 2 minutes, please. This will might help you out mindset this weekend. Okay, so I'm not going to look to take any more trades. I really want to talk about this over here. Let's find out right here. Okay, so one thing I want to talk about to everybody, the guys, the snipers in the group, we went over this, but for you guys, okay, just think about this. Everybody on the call, okay, let's take a minute just to think about this. Okay, back to the basics playbook. Number one, okay, educate yourself. Okay, so I don't mean to pick on that gentleman that came in here, but this is what I mean. Educate yourself before getting started. Take the time to educate yourself about the basics of trading. That's exactly what I was talking about. Learning what lot size to use for a $5,000 account. That's the basics of trading. Learn this before you take any live trades. Okay? Don't risk your hard-earned money when you don't know the basics. Learn the basics. Take your time. Learn how the financial markets work, the different type of assets and the various trading strategies and lot sizing and things like that. Number one. If we don't learn this, forget about making any money in the markets. Okay. Number two, develop a trading plan. Today was my Friday trading plan. Trade a little easier today on a Friday. If there was a move, take it with responsibly. We did gold. We got some pips out of it. So why risk everything? Develop a trading plan. A trading plan is essential for success. Define your trading goals, risk tolerance, preferred trading style. Everyone's got a different style, different time frames. Learn what's best for you and set clear rules and entries and exits. Stick to your plan and avoid making impulsive decisions. Not just in trading, in life. There was situations in my life where I did impulse decisions. It didn't turn out good. So in anything in life, be patient, be disciplined with everything you're doing. Whether it's if you want to jump in and get married, don't make sure you know who you're marrying. Okay, that's why we have a lot of divorce rates this time right now, is because everyone's making impulse decisions, getting married, and they're divorced within 6 months. So careful, okay? Old school mentality. My parents have been married over 50. What is it? They got married at 18. They're 70. My dad's 75. Okay, so you do the math. They didn't do an impulse decision. Just my dad's in a long position with my mom. It's a long hold. So no impulse there. But in life, in general, don't make impulsive decisions. Same with trading. Start with a demo account. Okay, I'm going back to a demo account. Begin your trading journey by practicing in a demo account. Nobody wants to do this because it's not the sexy way of trading. Nobody wants to say I'm trading in a demo. Why? Because it doesn't make you feel like, if you're learning, you're learning. Stop with this, I'm using a demo, I'm not a good trader. No, you're learning, okay? But you're learning without losing your own hard-earned money. We talked about this. If you're learning with a demo, maybe off of, if you're putting money aside in an account, maybe still learn with a demo, and $200 every biweekly, like off of your paycheck, put it into a prop firm account by holding money there. If you want to buy a prop firm, they're not cheap. $100,000 prop firm is what, $500? So if you're learning on a demo, maybe put money on the side in a little trading account, $200 every 2 weeks or a month. It will start adding up. You're learning how to trade, and then when you're ready, the money is waiting for you to trade live or buy a prop firm. And then now you have at least the basics and ready to trade. Yep, Dow might be breaking out of here. This allows you to familiarize yourself with the trading platform, trade different strategies, and gain experience without risking real money. Very important, okay? Manage risk. Okay, this is huge. This should be number one in my opinion. Risk management is crucial in trading. Never invest more than you can afford to lose, because it's going to be an ugly road if you do. Use stop loss orders to limit potential losses and consider diversifying. That's more options, but use stop losses. We talked about this. Whether you use a physical or a mental stop loss, I highly recommend, if you're new to trading and learning, physical stop loss all the way until you know what you're doing. More experienced traders trade with a mental stop loss, but if you're a beginner, don't even learn what a mental stop loss is right now in your journey. Stay informed. Stay updated on market news, like today, economic events. Okay, so that's what kind of kept us being cautious trading or trading gold. We waited for the market open news and things like that. This information can help you make informed trading decisions. Okay, so make sure you understand basics of market news, economic events, and folders. Analyze and use your tools. Utilize both technical and fundamental analysis to identify potential trading opportunities. Technical indicators and chart patterns can assist with timing trades and understanding market trends. Make sure to learn. If you're going to use technical indicators or anything, make sure you understand what they are and what they mean. If you're going to use RSI, MACD, stochastics, if you're going to put a Bollinger Band, Fibonacci, if you're going to use an ATR, if you're going to use moving averages, anything, don't just slap them on your chart because I use them, or don't just put them on your chart because your favorite YouTuber uses them. Understand what they mean. Back in the day, I used to love the MACD indicator. It was one of my favorites. I used to also use the awesome oscillator. That's what it's called, the awesome oscillator. Like, just things like that. But get to know what they are, because once you know what they are, it might complement your trading. Once you maybe start to learn price action, maybe if you don't want to use too many indicators, then don't. But use them as confluence. Okay. This one is big. Controlling emotions. This is one of the hardest things that in trading, right here. Emotions can cloud judgment and lead to irrational decisions. Keep your emotions in check and avoid making impulsive trades based on fear or greed. Okay, stick to your trading plan and remain disciplined. That's why I trade like a robot. I trade like a robot every day. I'm very emotionless when I trade the markets. I don't know, for over the years that I just became emotionless. Yeah, I do get affected when I lose, but I don't get as affected as I did before, because before, when I was losing, I was over leveraging. Now when I take a loss, it's still within my risk. So I'm really focusing on the development of the play and how the move is being engineered by the market makers. That's what I'm looking at. I'm not too focused on how much drawdown I'm in, because before I even take the trade, I've already calculated how much I'm risking on that trade. So for example, if I risked $200 on the next trade, I know that I could possibly lose that full $200. But if I'm trading with for example, a $100,000 account, how much is $200? Okay, so it's within risk. You know, some of you guys are trading with those prop firms too. You might trade with a $200,000, $300,000 prop firm. If you're risking $200 per trade, you're still within your risk. If you only have a $5,000 account and you're risking $1,000, you're risking 20% of your entire account for one trade. You're obviously going to panic when you're in that trade, because you can't just watch 20% of your capital just disappear in a couple minutes. You're going to panic. You're going to be stressed out. That's not the way how to trade. We're not looking to hit grand slams every time and go to the casino and get rich. You want to do this every single day, maybe gain 1% is realistic. Try it for 1% per day and see if you can do this for 5 days. See if you can do this for 2 weeks. If you can't do this consistently for 1 month, and then I got traders saying, Ron, I'm ready to quit my job and get all in. I say, before you're going to do that, before you're going to quit school and quit your job, prove to me, show me, I want to see that you can prove to me that you can do this for 1 month, 2 months, 3 months. Okay? Because if you quit your job and it's your sole income trading and you don't know what you're doing, it's very, very stressful. You got a lot of burden on your shoulders, especially if you have family and young kids and things like that, and debt you're still paying. Trading should be natural. Don't make it unnatural. Learn from mistakes. I can't stress this enough. Yesterday I took a loss. I learned from it. Everybody here that's a real trader and is honest and will admit we all make mistakes, but you got to learn from it in life. I made mistakes in my life too when I was younger. I had to learn from it and fix it as I got older. Trading is the same thing. If you don't learn from your mistakes, you're possibly going to continue doing them. We got US 30 continuing maybe to eat away at these offers. Congratulations if you guys are in the buys up there. Analyze your losing trades this weekend. Go back. You don't have to spend your entire weekend, because obviously weekends are for family and things like that. But 1 hour, okay? If you dedicated, add up how many hours you put into the week, into the trade. Let's all just, everybody on YouTube and Zoom, add up all of your hours that you did this week. I don't know, some of you guys start trading Sunday nights. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. How many hours right now, did everybody put in? I put in maybe about myself 5 hours a day. So 5 times, I don't trade Sundays. So 25 hours, okay? So if I put in 25 hours this week and I don't do at least 1 or 2 hours of homework on the weekend, you got to look at it as it's not a lot. Even if you dedicate yourself 1 hour, 2 hours on the weekend. I like to do it early in the morning when my kids are sleeping. Like Saturday morning, I get up early, 7 a.m. I go through everything. I journal, all that. Sometimes Sunday nights, I like Sunday nights to do everything. But it's important, guys. Add up all the hours you put into the markets and think about how much maybe you should be putting into reviewing trades. Some of you guys are putting way more. Some of you guys are doing this like it's a full-time job. You're putting in 40, 50, 60 hours a week trading. But then when I ask you how much are you doing in reviewing, 0. So it just doesn't add up. So it doesn't matter how many hours you put in the market. Make sure you're putting a few hours in reviewing. Review your good trades. Like today, gold. Let's review it. I'll go after this call. We'll talk about it. Like reviewing, so it's fresh in your mind. You understand what you did. So maybe next time you trade gold, again, there might be a red folder news. Maybe how do you go about it? That's what you learn from. Learn from the mistakes. Learn from what's working. And that will you'll learn from those experiences. Adjust your strategies accordingly to improve for future trades. Seek mentorship and guidance. Join our YouTube channel, join our mentorship, and whatever. Just find somebody who is teaching your style of trading. I really related when I was learning, more so not so much to strategies. I needed help with psychology. Okay, I knew how to trade candlesticks. I learned price action. I kind of self-taught myself that. I didn't need too much more help. I needed some polishing on price action. What I really needed help was with my psychology, and that's where Mark Douglas came in. There's others, big ones out there, big names out there, but they really focused on psychology, and that's what gravitated to me towards him as a mentor, was learning how to trade discipline. That's what I needed. That's where I admit was my downfall. So Mark Douglas, guys, if you haven't heard of him, download all his free YouTube stuff. He has an audio book. Might really help you in there. Surrounding yourself with knowledgeable individuals can accelerate your learning curve, not just in trading, in life. Surround yourself around positive individuals. I had to get all the negativity out of my life growing up. So when I started to get rid of the negativity, I started to surround myself with more positive minds, more positive people, and it helped me get ahead too in life. So surround yourself. If you have to, be selfish and get rid of negativity in your life, do it. Do it. Because they're not there to help you. They're there just to make your life worse. Surround yourself with positivity. Your circle might be very, very small, but that's the circle you want to be. You want to be surrounded by a very tight circle with positive people, and that will help you with everything in life. And it just starts there. It starts in everyday life, and then you'll carry that forward into your trading. Believe me, I had to do that. I had a lot of negativity around me, and that was affecting my trading. Finally, when I just got rid of them, I focused on the people that mattered, and they helped me get through tough times too. So be patient and persistent. Okay, persistent. I love this word. Okay, we can all be persistent. Don't give up. Okay, but if you're struggling, you have to figure out a way how to fix this. If you don't, then you're going to continue to make mistakes 1 week from now, 1 month from now, 6 months from now, 1 year from now. And if you worked very, very hard, one mistake in the future could destroy everything. So be persistent, but be patient and keep learning. Trading is a skill that takes time to master. We're not going to learn this on one YouTube session. It takes years and years and years to master. You're learning a skill, a financial skill, just like as if you were going to college or university to get a degree. Some of our traders in our group are making more money than they did when they were in school. So they're starting to see how trading can really change their life. But it takes time. Be patient with yourself and don't get discouraged by initial setbacks. We all have setbacks. Okay, you're always going to have setbacks, but don't get discouraged by it. Learn from it. Stay persistent. Continuously work on improving your knowledge and skills. And remember, trading involves risks, and there are no guaranteed profits. I wish I could tell you trading was guaranteed. It's not. It's essential to approach trading with a realistic mindset. Okay, highlight this: realistic mindset. Okay, we're not going to make Lamborghinis today. Maybe some of you guys will. Who knows? But realistic mindset. What is a realistic mindset? 0.5%, 1% per day. Try for that. Test yourself. Strive for that 0.5 or 1%. Some of you might say, Ron, I'm doing 1% every day for the past 2 months. Then I'm going to say, okay, why don't you test yourself with 1.5%? Why don't you test yourself with 2%? You can continue to push yourself. Obviously, we want to keep pushing you. I don't want to keep you on 0.5% if you can do more. Just use it as a benchmark to gauge where you are. If you can't hit 1% per day, then maybe reduce. Maybe you're a trader that can hit 0.5% per day and do it consistently. Don't do what others are doing. There might be someone in the group who can hit 10% per day every day. Who cares? That's his journey. That's what he does. That's got nothing to do with you or I. Trading is very personal. So just understand, set realistic goals, and then it increases your confidence. If you start hitting 1% per day daily, after 1 week, after 2 weeks, after 1 month, you're going to be like, wow, now your confidence is through the roof. Everything. You're like a bullish engulfing candle, ready to break out of your resistance. That's the way how I relate trading. When you're learning, might be a bearish candle, but you learn something and you're a liquidity grab. You pick up the wick. You learn something. You picked up something below. You learn something. Now you're pushing right back up. Now use that momentum and you can be a bullish engulfing candle, breaking out of your resistance and continue striving higher. So understand that losses are part of the process. It's very difficult for me because I'm trading live with you guys. I take losses, so I handle my losses. I know in front of an audience, it's not easy. That's why a lot of YouTube traders don't trade live, because they can't handle the losses. I don't care. I want to show you guys there's losses that happen. I'm not like a guru here or anything. I take losses just like anybody else. But the only thing that separates me from maybe somebody else is I manage my risk. That's it. That's the only difference. You guys are probably 100 times better trader than me. But the only thing that separates me from you is maybe I manage my risk a little bit different than you do. That's what you need to work on. Some of you guys understand the setups better than me, and I hope you guys do. I want you guys to strive to be better than me. Don't use me. I want you guys to be above me. Go above and beyond me. But use me as like confluence in your trading. A lot of traders said yesterday when I was taking the buy, they were in the sell, and they said, Ron, I'm using you as a confluence. So I don't, that's amazing. I love when people I ask you guys, are we bullish, bearish? Some of you guys are going to go against me. Sometimes I'm going to go against you, but that's trading. Everybody has their own bias. Just trade with the proper risk management, and then you can achieve success. Guys, these are uploaded for everybody. So back to the basics, learning to trade introduction class. That was our webinar. This one, 106, back to the basics, learning to trade. This was our YouTube session. I made that class 1, and then we're going to continue with this series. We're going to have the Traders Anonymous where we talk and everything. And yeah, guys, so beautiful buys out. If you were continuing to watch here, breaking out, took out London's high, continued to go up. After the news, broke out. Beautiful. If you guys got the buys, congratulations. If you guys took them, you don't need me to tell you to take the buys. You guys read the market beautifully. Like look at now, looking back. What did they do? 9:30, swept the low, took out the low, took out all the pending orders below, consolidated. News, they gapped it up, traded in this flag, and there's the continuation. Gold, we took gold this morning. Let's just bring up gold real quick. Let's take a look at gold here. Okay, so what did we do with gold this morning? Remember, we were waiting, okay? 805, 810. We got COMEX at 815, 820 right here. Came up. This now 825. Look at what they did. COMEX, they took out the high, and then they came back down. Now the news, okay, it was a big bearish candle coming down. The news was positive. I didn't take that. I started to get in on like these moves down here. As I saw it pull back up, started to add, and I took it down. I believe I got out right before that red line down into here. But now, when you're looking at gold, okay, so it held. See this box? It held in here, okay? It came in here, came out, and it started to break above this area. So even this area, you could have used this as maybe a buy. You could have flipped that. Look at if you're using your fibs, it came back above the 0.5, flip this red box green. That's why if you do zone to zone trading, just follow the liquidity, keep your zones. And then when it kind of closed above, there was your retest and push above. And then you could have, like, I hate to do this after the fact, but that's a nice possible buy right there. Where would you have placed your stop loss? Maybe by the 618 right there. And if you're in that buy, it's coming all the way right back up to where it all started, right back into this block. So that's a nice little move. We had the sell, and now it's building, and now it's coming right back up. And you could have been in that buy. But that's trading, guys. Hopefully you guys enjoyed today's session. I want you guys to learn more as much as you can. There will be lots of time for us to always trade daily, but knowledge is power, guys. Knowledge is power. So I hope everybody has a great weekend. Everybody in Zoom, enjoy your day, enjoy your weekend. Everybody on YouTube, thank you guys for tuning in. Appreciate all of you guys. Enjoy your Friday, enjoy your weekend. Juma Mubarak to everybody, and take care. Spend time with your family and friends, and we'll see you guys. Okay, enjoy, guys, session with PK. Tell PK I say what's up, and I got to go to the doctors right now, but I will see you guys. Enjoy your day, everybody. God bless, and thank you everyone for the likes, subscribes on YouTube. Remember, 75,000K. I'm gonna get Dave to do 24-hour session. It will do it. It will be a lot of fun. Okay, guys. But thank you, guys. Have a good day, everyone. Thanks, everyone. Appreciate all of you guys. Take care.
Hey guys, good morning. Welcome to another live session of Stocksnipertrading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please. Secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.